3, 2, 1, recording.
Hi everyone, welcome to session 3 of the VSA Trading Plan Workshop. I'm Lauren Snedeker. I am one of the co-hosts today. I'm here with Gavin Holmes, CEO of Trade Guider, Tom Williams, creator and longtime syndicate trader. And I'm also here with Earl Ehrenler, World Cup trading champion and VSA expert. So I want to welcome all of you. Over the past couple of sessions, we have talked about 2 of the 3 M's. We've talked about money management, risk management. We talked about the elements of a trading plan. And we talked about the second M, which was your method or strategy. And today we're going to be talking about the third M, which is your mindset. And today's objectives, we're going to review some trading plan examples from Tom and Gavin. We're going to understand the power of your thoughts, how your thoughts, your words, and your actions affect your ability to trade and to be very successful in anything you do. Identifying strategies for overcoming a losing trade. So if you have strategies for how you're trading, then you should have a strategy or a plan in mind for how to cope with a losing trade. And we're also going to address why you need a trading journal. Okay, so I would recommend that you have a pen and paper handy. And I am going to now give it to Gavin. And Gavin, I'm just going to mute myself just for sound quality purposes, and you can begin.
All right, thanks, Lauren. Let's just check a couple of things before we get going. Can everyone see my screen, first of all? That's a good start. Okay. And before I bring Tom Williams in here, I'm going to do it a slightly different way today for a good reason. I'm not going to show you the trading plan and the completed plan first. We're going to talk about fear and mindset first. Then we're going to show you how the plan helps you overcome those things. So it's going to be totally logical the way it works. But before I do that, we've got Tom. I'm with Tom Williams now. Last time I was doing this seminar with you all, I was in Chicago. I'm now here in Worthing. Miserable weather, Tom. We picked a good night to be doing this because I wouldn't want to be out there. But I know you wanted to say a few words about Earl, and it's a good time to do it now because I haven't been with you for 4 months. We've just had some of the most major breakthroughs, I would say, in the history of VSA. I don't think that's an exaggeration. We have met and are connected with the top commodities trader for soft commodities in the world, and we're starting a hedge fund here in England with this particular gentleman, Mike, and Tom has met him. I think you can see your legacy as you go out into the future here, where it's going. But you saw, I told you about Earl, and he's a member of the VSA club, and I know you wanted to say a few words publicly about Earl Ehrenler, who came second in the World Cup Trading Championship with a very good return. So I know, Tom, you wanted to do this publicly, so over to you.
Yeah, thanks, Gav. Yeah, Tom Williams here. I certainly would like to congratulate Earl on his performance, and of course especially pleasing to Trade Guider because he's a Trade Guider man. He can read the market. He's very dedicated, and I must say congratulations to you to become second in a severe trading competition like that. It takes quite a bit of effort and some knowledge. So thank you very much, Earl, and congratulations.
And remember, Tim Rain.
Well, Tom, I want to say thank you very much. I could not have done it without your book, Master the Markets, which steered me in the right direction. Actually, the thanks needs to go to you.
Well, no, that's fine. I mean, I wrote the book because originally when I started Genie Software, which is a company I had, it was really an amateurish outfit. I was really doing it for pleasure. But when you sent the program out to people, they didn't know what on earth you were talking about. So I had to write the book quickly to let people know more or less what they were looking at. And it took off from there. Now, funny enough, we had these 2 programmers from Beverly Hills here last few days, and the weather's been what England, we call it atrocious. But these guys loved it. They said it's marvelous weather. We actually love this. the wind and the fresh air blowing off the, as they call it, the ocean there. Here's the English Channel. And they were actually loved it, because I know in Beverly Hills, I was there 15 years, the weather's almost the same every day. And occasionally you get a little bit of wind, and there's all that smog and one thing and another. So to come here to England, where the wind's blowing and the rain washes the air out and everything, they seem to love it. But anyway, congratulations, Earl, and I know it takes quite a bit of effort to win those competitions, because you've really got to concentrate on exactly what you're doing there, and that's often very, very difficult.
Yeah, thanks a lot, Tom. Yeah, and I'll echo that as well.
Thanks, Tom. Okay.
Yeah, I'll just echo that as well, Earl. Congratulations, mate. And I say we want to do this publicly, because we will be distributing this particular webinar. But well done, and Tom and I are very, very proud of you. We think you've been a great ambassador for the business. We appreciate that, and we certainly appreciate you spending your time today helping other people to do the same thing that you've done. You have proven beyond reasonable doubt, that's a police saying, that you can make it in the markets, and you don't always get it right. Sometimes you get it wrong. But that's what we're going to talk about today. So
that's the whole purpose of a trading plan in the first place.
Exactly, and that's what we're here to talk about. So we're going to go in two parts today. Part one, Tom and I are going to talk about, I'm going to talk at the beginning here about something that's very important to me, which is mindset and beliefs, because 8 years ago, to be honest with you, I wouldn't have even considered talking about this publicly. I probably would have just avoided the whole subject. Right now, it's the most important thing due to the amount of fear that's being created by the media, a lot of uncertainty in the world. It's almost like the times in the 1930s, really, although it's never as bad as that. But Theodore Roosevelt said the only thing to fear is fear itself. I don't know, something like that. I can't remember the exact saying, but it was, don't fear. It was the message he was getting through. He's saying, look, we will get through this. We will get past this moment. And, something at the moment in the markets, people are missing great opportunities to make money because of fear and trepidation. And it's sad, but it's very media-driven. I mean, in the 1930s, you really had to rely on the newspapers to get your information. And then, even then, Mark Twain once said, if you read the newspaper, you are misinformed. If you don't read the newspaper, you're uninformed. Sorry, if you read, yeah, exactly, didn't he? Mark Twain said, if you don't read the newspaper, you're uninformed. If you do read the newspaper, you're misinformed. Now, that statement goes true today, but we're not talking about newspapers now. We're talking about the internet. We're talking about the television stations. We are bombarded as human beings with information. Now, that information should be useful to us, but as Tom has taught me, in the stock market, it's often completely useless. So very intelligent people will make very, in their opinion, intelligent decisions to buy gold in August because it's a safe haven, only to find it drops. They'll then look back and go, what the hell happened there? And then they'll go, oh, hold on a minute. I was told to keep out the stock market in August, and it goes up. Now that is against all human logic. But of course, as Tom taught me, the smart money understand how you think. Now, what we're going to talk about today is the power of thought in trading and investing, because I've learned this to be true, that in order to be successful in any venture in life, you have to think. So I've headlined this, if I can do it, you can do it. What I mean by that is that I have changed my directional path in life some 8 years ago to not only learn from the master here, I got very lucky, I'll admit that, but I've used that fortune to create an international company, to learn to trade, to start a hedge fund, which I'm doing here in England, to build a new international software program for hedge funds. So, and I started off nothing more than a policeman. Now, I don't mean it to mean the police at all, by the way, but when I started my career many, many years ago, if you'd have said to me, Gavin, when you're 45, which is what I am, you'll be in Chicago, living downtown in the heart of the financial district. You have a lovely townhouse. You'll be married to an American. You'll have 2 lovely kids. You'll be traveling the world doing seminars. You'll have written 2 books. I would have called you a madman or a mad woman. But my life has taken that path. And I want to talk to you a little bit today about why, when we imagine things, certain things happen. So what is a belief? Now, for all of us, it means different things. Some people think beliefs are unimportant. And I know that because I've met them. They say, oh, no. Gavin, look, it's nothing to do with beliefs or anything. You just get lucky in the market. You just get lucky. It's all about luck, okay? There's no way you can actually read the charts. You just get lucky. Other traders that I've met have said, no, it's all about inside information. Everyone that gives me a tip is usually right until you lose money. But whatever you say, the one thing that makes a great trader is having the right mindset and the right belief system. And I'm pretty sure that when we talk to Tom, and certainly Earl and Lauren, these 2 things are very important. But we start with the one thing that drives the markets: fear. Fear. Well, let me ask all of you now. I'll ask you a question. Which emotion is driving the current market sentiment, fear or greed? What do you think it is? What is driving current market sentiment, do you think? Just type it in. Okay, I've got 3. Keep going. Ha 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 ha. William, I love it. Okay, so William, long-standing customer of ours, says down in South Carolina, herd, fear, smart money, greed. Do you hear that? Yeah, it's great. Perfect. That's exactly right, William. Exactly right. So the majority are in fear, but the smart money have got greedy and are making a lot of money. How do we know they're making a lot of money? Look at the stock market. It's been going up. They brought in August, when they told the herd through the media, hey, don't buy stocks, everyone, get into gold. Get into gold, because gold is apparently the safe haven. What did gold do between August and December last year? I keep repeating it so you understand this. What did gold do? Did it go up or down between August and December last year? What happened? Did it go up or down? Jennifer's saying crashed. Yeah, well, it did worse than that. Okay, down. Yeah, absolutely. And a couple of you said it fell. What did the stock market do? Did it go up or down? So just type this in. I want to make sure. I just want to reinforce this before we start, so I can show you how this works. I have to be repetitive on this so you understand it, because in order to change your thought processes to the market, I have to be a bit repetitive. That's how I learn. How many times do you say the same things to me?
Well, over and over again.
Right. Tom just said that over and over again. Tom has sat with me, correct? And almost well, you did say one thing to me. You said I came to the market unpolluted.
That's right.
I didn't know anything. So I could then learn from you the correct way, because I didn't have any preconceived ideas about the market.
That's right.
And we'll talk about that in a minute. So let's go and talk now today about being successful and belief in what you are as a person. This is a headline that was written about a year ago about, and I don't think you've even seen this, but Tom, it's called Living the American Dream. It was written by Thomas Petty, and it's about me and how I moved to Chicago, because you said to me, if you want to go make money, you've got to go to America, where the money is. So you said, go to Chicago, don't start in London for the money. There's money in London, but America's the place to be. And I did exactly what Tom said. I went over there, really. I went over to America initially 10 years ago to be there for 3 months just to help the company start. But life always takes you in different directions, and I won't dwell on this point. Suffice to say, I truly believe I'm living the American dream, loving every minute of it, as Tom Petty says. And I believe anyone can live a dream if you believe. Depends what you believe in, though. And we're going to talk today about how I helped, well, sorry, how I was helped to understand what a dream is, be it you want to be a hedge fund manager, you want to be an investor, you want to be a great trader, you want to emulate Tom Williams, whatever it is, the first thing you've got to do is set it in your mind. Now, I've got a picture here of me trading at the New York Traders Expo. There was about 1,000 people overall watching. And 2 years prior to this incident, I've written about it in my book, I actually kept thinking, almost every morning I'd wake up, thinking I'm getting this VSA stuff, but in order to make this real for people, I really need to be in front of a large audience and take a real trade. There's no point in talking about it. I have to go somewhere and do it because I know it works. I believe in it. And a few months later, I got a phone call to attend the New York Traders Expo where we had a booth, and I was invited to be the featured trader in the Traders Challenge. This is where they put two traders together on stage for an hour and a half, basically trading real money against each other. It's a bit of fun, but it's not, because you're trading real money. So Tom said to me, "Oh, right, Gav, that's like being in the lion's den. The gladiator, going in there, they want you to fail because they failed and you're going to be under pressure." But I always remember the moment I sat there and I'd already visualized a winning trade. And I can't explain it, and I'm not going to try, how I had that visualization. But I do know that when I sat down and began to look at the charts, for the first 45 minutes to an hour, nothing made sense. So there was no trade. But suddenly, there it was right in front of my eyes. We'd seen a shakeout in the background, which I didn't see it initially, but the signal was there. And Tom always told me, he said, "You ignore the signals at your peril." The market went up, and then I looked, I thought, well, what signal should I be looking for now? And then Tom's voice came into my mind and said, it's got to be test in a rising market or no supply. And lo and behold, you can't see it in this picture, but up came on the 3-minute chart a test in a rising market, and I didn't hesitate, I pulled the trigger. I put my account up live. I said, I'm going long because VSA tells me this principle is here right in front of me at this moment, and I need to go long. And guess what? Of course it worked, because the principles work, Tom, right? You can't deny the principles. So I ended up, after that moment, deciding I wanted to write a book. And I remember coming here to Tom's. I've still got the recordings, actually, of the conversations we had. And I said, "Tom, I'm terrible at writing." He said, "No, you've got to write a book. You've got to leave your calling card," was what he said.
Yeah, it is your calling card.
It's your calling card. And I said, "Well, I've got no idea, and I've got this on the recording, what to call it." So we were battering around names, and then I said, "What about trading in the shadow of the smart money?" And you turned around, you nodded, you went, "That's it. That's it. Very good," he said, "very good." And 2 years later, 2.5 years later, the book materialized, and that's the website, Trading in the Shadow, and the book's done well. Now, I realized then that I'm nothing special. I'm just a guy. I'm nothing special. So I've now managed to go down a path of success. How do you do that? Well, first of all, when we look at anything in life, whether you're going to be a golfer, whether you're going to be a trader, whether you're going to be a hedge fund manager, you've got to deal with fear. And you've got to understand the human response to fear, because that's the first part. You've then got to understand what a self-limiting belief is, what holds you back from your normal power to make money and to help others. You've also got to understand, if you're a trader, why so many retail traders and investors lose in the market. They're almost programmed to lose from the beginning. You must have a trading plan. It's the key to success. We're going to show you a combined version of Tom's and mine trading plan. I've combined them to make it easy for you to understand, and you're going to get a copy of this plan when we download this on Monday. Now, trading and investing is an important part of creating wealth. So I'm going to talk today about the keys of wealth creation, because I don't just make money from trading and investing. I make money from business investments. Don't get me wrong. Sometimes I put a lot of money into investments that don't pay me back immediately, and that can be concerning. You know, I've invested a great deal of money in TradeGuider, and have I seen a payback? Sure, but not what I really expect. I mean, I've got a serious amount of payback in the future to come that I expect for my investment in the company right at the beginning. We're going to talk a little bit about something called the law of attraction. I'm not going to spend too much time on it, but I believe it to be a key part of success. There's also the law of repulsion, where you self-destruct. You actually encourage loss of money, self-esteem, and health. It's a proof. Science is trying to prove this now, and they're getting a long way to doing so. Many of you will have heard of the experiments going on in Switzerland at the CERN Colander, where they're trying to crash particles together to prove what the universe is made of. How many of you have heard of that, by the way? Have you heard of that, Tom, what they're doing in Switzerland? You've heard of it, yeah?
Oh, yeah. Well,
Just type in here. Have you heard about the experiments going on in Chicago? They had it in Chicago as well, where they're colliding particles to try to prove what the universe is made of. Well, Joyce, go and type in into Google, yeah, CERN, Switzerland. You'll find it. It's called the Super Collider. This information, as a physics, of course, because as science tries to prove one thing, which is great because we all want that, then there's other thought processes and other teachings out there that try to prove another. Jennifer says they are worried it would create a small black hole. Yeah, well, I'm not going to start getting into the black hole theory, but what I have learned is open your mind and information is received that will help you. Close your mind, say it doesn't exist, and you won't get the information to help you. So remember that. Open your mind, information flows. Close your mind and say, oh no, I don't believe that. I don't is a negative connotation. You will never get the information that you really need to move to the next level in your life. And, of course, financially, that's important. Has anyone heard of this book, The Science of Getting Rich by Wallace Wattles? Has anyone heard of that book? Just say yes or no. Anyone heard of this book? Okay. Okay, a lot of you saying no. Okay. Oh, Ed's got it. Okay, so a couple of you said yes. Okay, several of you have the book. Okay. It's a book of information. Okay, all I'm going to do, I'm going to make sure that Lauren gets you a copy of this PDF with my compliments. Read it with an open mind. I'm not going to talk any more about it. It's the book, or one of the books, that assisted me in understanding how to move forward in life. Open your mind to the information within it. You don't have to agree with everything. As I say, I'm a police officer, former policeman. I'm presenting to you some evidence. All you've got to do is decide which bits of this evidence is going to help you and which bits of this evidence you're going to discount. I mean, that's how juries work. So today, imagine you're the jury and I'm the policeman giving evidence. But very importantly, keep your mind open. You never know, there might be an aha moment that may make the difference to you as it did to me. So what is fear in the financial markets? Fear is a horrible word, isn't it? F-E-A-R, fear. I mean, I remember Tom said to me, oh, the market's devious, he says. Right?
Yeah.
Devious. Now, I'm going to bring Tom in a minute because the markets do actually work on human emotion, whether we accept it or not. They definitely do. They work on fear and greed. I mean, greed at the top, you know, let's go long gold, we're going to make money. And then fear as BP stock collapses and everyone panics and gets the hell out, someone's on the other end of that trade to buy it. I call them the smart money. Tom calls it professionals. Call it what you want. The markets are not difficult to understand when you use some simple intelligence that we all have. So what is fear? It's the fear of experiencing losses. The fear of uncertainty. No human being likes to have uncertainty in their life. We like definite certainty that tomorrow we know what's going to happen. Of course, that's complete nonsense. We don't know what's going to happen at all. The fear of a market collapse. If I'm in the market overnight, what happens if there's a Well, you mentioned this actually. You said, well, what happens if, say, there's a major event like 9/11 or the assassination of a president or this, and you've got your orders in the market. You don't know. Creates all this fear. So let me bring Tom in now, and I want you to, Tom, you obviously, we're going to talk about your trading plan later, but which is a very good, very simple plan. But what would you say to traders and investors who are using VSA, which you obviously have developed, and yet deep down inside they see a principle at the right edge of the chart, it's obvious, but suddenly they doubt themselves. They go, oh my goodness, I'm not so sure now. And that FEAR, the fear, sets into them, and they do nothing, only to see the trade do exactly what they thought. What would you advise?
Well, one of the problems that you will have is that even when you look back on the charts and you see a sign of strength automatically appear and all the rest of it, but on that particular bar when that happened, you personally are probably not geared up. I call it geared up to go long. I mean, why should you be? Why should you be geared up to go long? The market's been falling. The news is bad, right? It probably gaps down one day. The news is very bad. Now, you're not geared up to suddenly think, oh, I'm going long. Because you're gripped with all the bad news, the fear, and even at the best, even if you're thinking of going long, you may look at it and say, well, I think I better wait and see what happens. And then that, of course, knocks you out of a winning trade, because you'll see very, very often, if you get a sign of strength, there's a huge widespread up bar immediately after closing on the high, and of course that's done deliberately by the market makers and whoever, right? We don't sort of think too much about all the whys and wherefores, but somebody's marked it up, closed on the high, and that's done deliberately. So you say, oh my God, I've missed that move now, because you're reluctant to go in at a much higher price than you could have got in on the previous bar day. And so all I can say is study the principles and or what we call the setups. There are only 3 ones at the top and possibly, well, 3 at the bottom. And you don't trade until you see that. And then, because you know the principle works, when certain things happen, the market has to fall or has to go up after that event. And then you have confidence, and of course that eliminates the fear here. But, I mean, Gavin was talking yesterday and he said to me, he said, by the way, how intelligent are you anyway? Well, I've got no idea how intelligent I'm supposed to be, but I know my strong point, and the strong point is I'm persistent. I never give up. When I started studying this, I used to drive around in the car with tapes playing all the time, never listened to anything else but stock market interpretation, never. Went on for several years. I was absolutely determined to nail this down as best I could anyway. And it's that persistent over time that reaps success for you. And that's how I did it. And of course, you know, I was back in England. I wasn't too keen on California with all that smog burning my eyes and one thing and another. And that's why I decided to come back here to England, you know, where the wind's blowing and the air's fresh, which is wonderful. But when IBM announced they were coming out with their first desktop computer, I thought, well, that's the answer probably. I mean, I know computers only understand black or white. You've either got it right or you've got it wrong. So I then concentrated. It wasn't easy to find a program. I was lucky to find a program in those initial stages which came up with a program. So I knew then it could actually work. And that's where it all started. And of course, when you're writing or instructing a program on rule sets to make the market move one way or the other, or to interpretate the move, then that really concentrates the mind. And I spent months or even years, to be quite honest, nailing all this down as best I could. And we've still got a long way to go.
Yeah, and we are going a long way. In fact, we're going to the next level. We're going institutional. But let's get back to the whole the theme of this. Why is it that then quite a lot of retail, I'm going to say retail there, I should have put that, you know, the smaller traders, why do they lose money in the markets? Well, one of the reasons so many small traders and investors lose money, lack of education. They don't understand the game that's being played. They don't understand the game on Wall Street. They don't understand that the markets are being moved by big players, and they don't understand that you can track that movement in volume. Now you, and just like the last group of traders and investors we had in our last course here, are getting information that very few educators teach. Why? Because it's a little contrarian. It's not mainstream. And it's not mainstream because mainstream means you just go out there and teach a MACD, a moving average, a stochastic, because everyone else does it. There's a lot of educators that make a lot of money doing that. But guess what? When you teach the truth, the message which is the truth, it takes human beings time to understand it because they've been taught so much rubbish that they finally, when they're told the truth, don't believe it, right, Tom? Right in front of them, they go, well, you're telling the truth. But in this business, there's a lot of rubbish that's around.
Oh, a lot.
And there is, and that gets people. So, what is fear then in the markets? I mean, this is fear in anything, but certainly in the markets, fear is a distressing negative sensation induced by a perceived or a real threat. Now, the important thing here is the word perceived. It is an emotion that is a basic survival mechanism occurring in response to a specific stimulus, such as pain or the threat of danger. Fear is the ability to recognize danger, leading to an urge to confront or flee from the threat. Now, perceived. In the markets, perceived threats are there all the time. The smart money actually put them out there. They make you think that a market's going to do something. I mean, Tom and I could tell you about British Petroleum. They said, well, this stock's going to zero. In fact, Libya are going to buy it. And just as they came out in the media and said that, they all rushed in and bought. True, Tom?
Oh, yes.
Exactly what happened. So perception is everything. So you must almost ask yourself, in the markets, is what you're hearing and seeing real? Please do not feed fears, because, again, a fear is nothing more than a thought that reacts in emotion. And it's easy to say that, but I know it can be mastered. When you're trading in front of an audience of 1,000 people with a real account, I can promise you feel fear. I've done it many times, not just in this country, not just in America, because I'm in England now, not just in the Middle East. I've done it in different places. And the first feeling you have, that first seminar I did, I was petrified. And yet it was a negative, non-helpful emotion to what I was trying to achieve. The fear was actually causing me to think unclearly. So once I was able to master that, I became able, well, like I do now, I can not fear things because I'm able to compute what I see and make a decision to go long, short in the markets, but whatever. Now, when you feed fears, you worry. Has anyone ever experienced the emotion of worry, where you worry about something in the future that's never happened, but you think it's coming, so you worry about it? So you just worry. Or all you do every moment is you keep thinking about it, and you think the worst is about to come. How many of you have experienced that emotion of worrying about something? It could be an investment. It could be something in your personal life. How many of you have got worried where you've actually, okay, and some of you said, a couple of you said panic attacks, fearful. Now, think about the human body for a second. I'm going to explain why that happens scientifically in a minute. Plan for the worst, hope for the best. Well, you know something, that's actually against my thought process. I never plan for the worst. I try to create the best. But worry, I used to worry all the time. So let me just tell you, I'm not coming at this from a, oh, guess what, I've never had that happen to me. Oh, I've been through some very serious situations. But as a police officer, used to worry about going to work every day. My mum always tells me, and she's a worrier, she's been born worrier, oh, Gavin, isn't the world a terrible place? Oh, every day. And all she does is watch TV, which I've pretty much given up doing. So worry is nothing more than fear of a perceived threat that hasn't actually happened. And many times when you get to the situation where the threat is at your door, it's dealt with and you move forward. I know because it's happened to me. So why do we worry? What benefit does it do to us as human beings? None. It causes stress, which is not good. It causes bad health. But it's easy to say don't worry to anyone. I mean, as Tom said, it's easy to tell someone who's 500 pounds you need to diet. But it's easy to say anything to anyone, but you live your own life.
Well, your emotions aren't involved.
Exactly. You can tell someone else to do something, but it's not their emotions. So what I believe in doing is do what I did, was I listened to information from many different educators around the world and took pieces of that information in order to improve the life, my life personally, and the life of those around me. I didn't take everything. I just took pieces. And that's what I'm going to suggest you do today. Take what pieces of this information you feel are relevant to your current situation. Some of you will say, well, I don't have any fear, Gavin. I've met people like that. They go, oh, Gavin, I don't fear anything. I'm having a great life. I mean, sitting next to Tom sits here. I tell you, this guy's talk about I am always right. When he looks at something, he says, no, I'm right. And generally speaking, he's right because he believes he's right and because he knows his subject. So, you know, and is Tom Williams stubborn? If you talk to his girlfriend Dallas, she'd say yes. But what does stubborn mean? It means I believe in this outcome, so I'm going to follow it, right?
Well, that's it.
Call it stubborn. But you're not going to say, well, Gavin, you're right, I'm wrong, if you believe you're right because you want to appease me.
No.
And you don't.
No.
No. Well, people do, but you can't. But you're right, you can't. So remember, what causes these emotions? Now, how many of you, and again, I'll ask the question, have heard of the saying the amygdala, which is part of your brain? How many of you know that you have this in your brain? Let me ask, yes or no? I'm getting a bit scientific on you.
What's it called?
The amygdala. It's the part at the back of your brain which controls the cortex. How many of you know what this is? I mean, some of you won't know, but this is getting a little scientific here. But it exists. You can go into everything I'm telling you here is the truth. Okay. All right. So let's talk about, and why you're saying to me, Gavin, hold on a minute, this is about trading plans, and here we are looking at a human brain. Very important. Very important. Because if you don't understand the fight, flight, freeze response mechanism, which is an inborn response that prepares you to fight or flee from the perceived attack, harm, or threat, then when you're trading and investing, you're not going to understand your own emotions. So how can you control them? You can't. I had to learn this. Tom doesn't even need this because he doesn't have the emotional responses because he's so confident in his trading and his investing. He doesn't have those. He's trained himself not to have it. Now, I'm going to bring Tom in on this one. In your book, The Undeclared Secrets That Drive the Stock Market and Master the Markets, you make a point. You describe in the book a soldier that's trained to go into battle and has automatic responses when they're shot at and all of that, and you use the same analogy in trading and investing. I'm going to use this analogy that the training and the learning experience a soldier has is much the same as a retail trader needs to learn and condition themselves for when they do take a live trade. So let me ask you, why did you use the analogy of a soldier? Because a soldier most definitely has a fight or flight mechanism.
Well, that's obviously comes automatic Nobody wants to get shot and killed. And let's face it, if you're a soldier, you're not much good to yourself, the army, or your country if you get killed. So there's a great effort to put in what they call training. And the whole object of training is that when you're in a serious situation, you are taught how to fight as a group perhaps, or individually, or keep your head down, or now's the time to do this or that. And that all comes automatically when you're under threat out in the field. And you can more or less say the same thing happens when you're trading. How often have you taken the trade, suddenly it turns against you? Are you ready for that? If you train yourself up. Now, one thing with Gavin, I must say that if he's wrong or gets it wrong, he's out. And that's, in other words, you live to fight another day. But the worst thing you can do is to hang on, pray, hope that the market's going to turn around and get you out of trouble. But if you look at the software now, when these markets start determined to fall, and the computer colors the bars red, lo and behold, red, 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 red as it falls. There's no blue bars because they're not there to give you a chance as what we call weak holders to get out of your trade. And then until you're emotionally forced out of it after some considerable loss and drop. So you need to keep that in mind. You look at the trading system on VSA and see what I tell you is in fact the truth there. But you can keep talking. I mean, Gavin talks about all this. Be quite honest, a lot of it personally goes over my head. I'm a little bit more down to earth. You know, if I see something, I go in, and if I'm wrong, I get out. And I try to use the trending system built into the program to keep me in a trade. Because if you're in a successful long trade, it's very, very easy to get shaken out, talked out of it, very easy. But the trending system that we recommend is that as the market goes up, each bar is colored blue. And to have a blue bar, then the close has to be higher than the close of the previous bar. Now this works because the professional element behind that particular move, they must keep control of the move. Otherwise, other groups will soon come in and start selling, and you will then lose money as a professional. So you need to keep the trend going up in the bull move. And you see that going on. I mean, last week, I do a newsletter. Last week, Saturday, I showed the S&P weekly chart. Now that's been going up for months. And all the blue bars, and how it works is because the professional money, they have to support the market and not lose control of it. That's the key part of it. Because there are no friends in the stock market. One group will gladly stamp all over the other one, believe me. So that's why that particularly works. And you've only got to look at the charts and see, in fact, it does work. Following that system, right, you allow for one down bar, ignore level bars, and the one down bar you allow for, the volume, it should be less, preferably in the previous two bars. That means, okay, the selling pressure's off. That means they still want to maintain the upward momentum.
Yeah, just so you know, we just showed a chart of what Tom was saying there. I mean, we jumped away from fear to charts, but it's important to realize that, look, the market has been in the bull move since November of last year. There's no supply. Don't ignore the news, because the news you know, is there to mislead you, and it really is, and I had to learn that. So how do you know when you're having this attack, which is what goes on when you're trading? Now, when we talk about fear, I know Tom said, well, it goes over my head, I don't really care all about this stuff. That's Tom's personality. That doesn't mean that the thousands of traders and investors on our databases and customers of ours are like Tom. They're not. Don't think I've met another Tom Williams in my life. I haven't. He's unique. Okay, he's unique in every way, and he's sitting there smiling, but that's pretty true. I don't have another friend like Tom Williams, and that's why I spend as much time here as I can, even though I've got a family, for that same reason. So I always say to Tom, look, Tom, you look at the world in a very straightforward way, and you've been very lucky, I think, to have met Ike West and all the people in Beverly Hills, and to come back and to be able to do what you've done. But the majority of people out there are not Tom Williams. So I realized my mission is to take Tom's work and try to put it into a perspective that makes money for not just the extremely intelligent people, but for someone that's right at the base, just starting in trading, and can pick this stuff up, which is why I realized that trading plans and developing a strategy is vital to the beginning trader and even the intermediate. The more advanced traders like Tom probably don't need them. But I think Earl has told me he's had a trading plan. Lauren's got a trading plan. You know, I can keep going on trading plans. Many of the people that I talk to that are great traders do have trading plans. Tom has a very one-page simplified version of a plan that I'm going to show you. And it's not based on emotion or fear or anything, because Tom has made his money in life, is totally confident, and knows how to read a chart. But let's, Ed's asked a question here. I'll address it. I heard Tom say he enters positions at first VSA principal indication. He does not use stops. No, that's not true, Ed. You've never said you don't use stops, have you? Occasionally, he mostly uses stops. Right, Ed, we're going to come to Tom's trading plan shortly with mine, and I'll answer that. All the questions you've just asked will be answered when we get to the trading plan part, which will be in about 20 minutes. So I'll save that. So, what is fear? Fear is forget everything and run. Which, when you're in a bad trade, you're like, oh my goodness, it's going against me, and you want to run away from it.
And then you feel so much better.
You do after you've got out the trade, but if you've lost a lot of money, you don't. I take this view and say, what you should say, okay, forget fear. If the trade is going against you and it doesn't look right, close it. Is that right? How much advice can we give on closing a losing trade? I don't think we can keep stressing that importance of. Let me bring in Earl quickly, because Earl's a proven candidate for showing how you do this. Earl, did you ever make losing trades last year when you came second in the competition?
Yes, everybody experiences drawdowns, including me.
So did you ever experience that uncomfortable feeling of fear when the market kept going against you and you're like, hold on a second, I'm sure I'm right. What was your thought process when you you literally closed the position for a loss?
Well, my thought process is actually comes down to risk management. In other words, I don't put all my eggs in one basket. I ask myself the question of, all right, how many losing trades can I have in a row before I wipe out my account? And I try to keep the answer in my competition account above 10. So if the trade goes against me, and mentally in my mind, I'm like, oh, I can trade 9 more times. I have enough money in my account to trade 9 more times. Just to keep things simple.
Yeah, that's exactly the right attitude. Lauren, let me ask you, because you've been studying this stuff for a long time now, and you haven't been in the markets for years. But how important, Lauren, would you say, from what you've seen so far, how important is risk management and managing your money when it comes to a trading plan? What would you say on that?
I would say the belief in your strategy. So I know for me as a beginning trader, I really wanted to make sure I could read the charts, and I had specific criteria or filters for entry. And then once I was in the trade, I kind of played around a little bit, but I wanted to feel comfortable that I had either a hard stop at the worst, at the very least, so I didn't get up and make a sandwich and lose money like your friend, and then also just sort of eyeballing it and kind of having having it, knowing that I was making the right decision based on what I saw, but knowing that the market is still volatile and could turn against you. So kind of anticipating a winning trade, but also trying to manage the potential loss.
Excellent. So there you have it. Now, as Lauren was talking, the human brain appeared. And I will say, I think Lauren is an incredibly, incredibly intelligent person who's picked up VSA probably quicker than anyone else I've known. And you were listening earlier, weren't you, Tom?
Yes, you good.
Very good, very good. And now what makes some people pick things up quickly and others take years? Well, let's look at, and I'm not going to spend a lot of time on this, but I want you to all understand something. Your brain is your computer. Whether you like it or not, it is. And it's there to guide you. And it's got parts of the brain which cause emotion. Now, I'm not going to get into all of this, but the amygdala here this is the part of the brain, okay, right there. It's very small, right in the middle. That's the bit that causes the emotional responses that triggers your body to do something, okay? And in trading, this can be your worst enemy. All right, the rest of it you can go and look at. This part here of the brain exists, it's real, and don't think, oh, well, we don't need to know this. You definitely do, because if you can understand how your brain responds to stimuli in the market, you can make better trading decisions. So what is emotional intelligence? Well, defining it is saying the learned process of accurately perceiving, appraising, and expressing emotion and the ability to regulate emotions. Now, why have I underlined that, or why is it underlined? Because in trading, the biggest enemy you have is your own emotions. And the same in investing. Some human beings, some individuals do not get emotional about their trading. On the right-hand side of me is Tom Williams. He doesn't get that emotional about trading, trust me. He just says, go in, Gav, get out, Gav, right? That's pretty much it. When I'm trading your account, it's a pretty sizable account, I'm pressing the buttons. He's like, yeah, that's a principal, go in. Right, is it working? He says 10 minutes later, yeah, it's working, it's working. Right, leave it up, keep it going, let's go. What's happening? Well, it's gone down a bit, Tom. Okay, close it, we'll wait for another opportunity. It's very unemotional. The hedge fund manager that came to meet us here in England, wasn't he? Now, Mike was good, wasn't he? He was totally, well, you tell the story. This is I don't want to say his whole name, but suffice to say, big trader, the largest soft commodity trader in the world, trading sugar, coffee, etc., was with us for half a day, only 2 days ago. Tom, explain the meeting and just how clever that guy is.
Well, yes, this guy, I was quite impressed with him. Obviously, he had seen VSA at work, and he figures, quite rightly, that this is going to improve or enhance his business tremendously because it gives you far better pinpoint places to buy or sell. But he was explaining his trading strategy, and I can't repeat it, be quite honest.
Right, you can't repeat it. It's proprietary.
It's proprietary, I can't. But at the end he said, I can lose 30%, right, and I still make money. And I remember things like that coming up in my mind from the old days. So he's definitely a professional. He's only about Gavin's age. I'm not quite sure how he started or how he got into it all. But he's obviously a clever guy, full of health and vigor, which is important, of course. So you keep your health and you're happy and you're prepared to go in and study and take active part in it. But I was very impressed with him, to be quite honest, very.
Yeah, that's the future of where we're going. Now, how do you control then this? It's called a hijack of the brain. It's nothing more than electrical responses based on what you're seeing. I mean, let's give you an example. Let's imagine, okay, let's all imagine for a minute, you're trading the futures market, the E-mini S&P. You see something that looks good. You've put 20 contracts on. which is $12.50 a tick. So for every single ticker price, 250 bucks. Okay. So now the market's gone against you 4 ticks. That's $1,000 down. Let's say you've got 20,000 in your account and you're gambling with the market a bit. It goes down again another 4 ticks, but all the principals are with you. $2,000 down. What happens? You panic. You start to, the heart races. You think, oh, and you're getting confused. But if you've got experience as a trader, you'll know if you're completely wrong because you'll read the charts. So what you now need to do is the following things. Stop, oxygenate, seek, strengthen. That's exactly how I trade. If I see something that's put me under pressure, I stop my thought process immediately. I don't let it go away with me. I'm like a soldier under attack. It's a bit like a soldier going through Afghanistan. For 2 days, he's seen no action. Okay, nothing. Walking along the road, nothing goes on. Bang! There's a shot. Immediately, the soldier goes into action. Of course, the heart will create the oxygen anyway because it will beat faster. But the soldier then needs to see where did that bullet come from? Who's shooting at me? So he seeks, or she seeks, new information. Where am I getting shot from? Then, number 4, focus. My training taught me to cock my weapon, stay under cover, and search for the enemy. Now, trading's no different. That's exactly how I trade. As soon as I get under pressure, stop. Don't react. Don't panic. Breathe slowly. What am I seeing here? Is there something I missed in the background? If I'm long and the market's going short, what did I miss? Have I mistimed it? And then I strengthen my focus. I say, right, what am I going to do here? And as Tom said, my best ability is to cut a trade I don't like. Right, Tom? I just get out the position. If I don't like it, I'm not going to say, no, I was right, and deny that the new information in front of me is not there. If it's there, I'll give you a great example. A few days ago, I shorted the British pound. Upthrust, trend was coming down, weakness in the background, beautiful trade, $200 in my favor. Suddenly, right in front of me, massive volume down bar, closed in the middle. But I was still in profit. I said, well, no, I said to myself, this is going to keep going down because I'm short. I'm attached to my trade. Happens to me all the time. I still have to refocus. But right in front of me was a shakeout on the 15-minute chart. They'd marked it down and bought more, but I'm short. But I'm making money. So I decide I'm going to stay in the trade. Market goes up. I say, no, the volume's pretty low. It's not going to go any further. I'm telling myself, I'm trying to tell the market what to do. Stupid. I go back, I start to get to break even. Now the 200 I could have made, and then it could have been more, it could have been 400, is now back at 0. Now, I have to stop, because now anger could set in, because I could say, I'm so angry that I didn't take 400, that I could just say, no, I'm going to move my stop back because I'm right. But you know something? I was wrong. So I breathed. That's all you do. You stop. I looked at the new information in front of me, a big green signal, and there's Tom saying, you ignore the signals at your peril. This is true. I focused. I lost $25. $400 winner, which it would have been had it hit my target, was a $200, $300 winner, turned into a $25 loss. Do you know why I was pleased with what I did? Because I sought new information, focused, and closed my trade out for a very small loss. Guess what the market did? It went and upthrusted some 35 ticks and would have killed me if I stayed in the trade. Let me ask a question. In fact, we'll actually use a poll for this if we can. So please just let's just vote here. I'm just about to put a poll up. I'm going to ask you all a question here. How many of you here have heard of the law of attraction? How many of you have heard of this universal law? Just want to ask the question. How many of you have heard? I'll wait till everyone's voted. So the question is, how many of you here have heard about the universal law of attraction, which is a law? Okay, so you should be able to see there the results of that. So, and I'm not particularly surprised about that. Yeah, not surprised at all. So there you see. Let me just share it again. Someone said I didn't see the results. 86% of you said yes. Now that is very high because previously, 5 years ago, that would be much lower. I'll just ask you, if I may, how did you hear about the book or about the law of attraction? Jennifer said she bought the book The Secret by it's Rhonda Byrne, isn't it? Yeah. How many of you, where did you see this? Where did you get this information? Oh, a lot of you are saying The Secret. Okay, well that makes sense. That makes a lot of sense because that's where I initially found the information. Yeah. Okay, most of you saying the same thing. Good. Well, that's how the universe works because you're here because of a reason that you felt you should learn something. So it's important to understand what that means. We have a new world economy right in front of us. Okay, are there big changes coming? Yeah, there was in the 1930s, and we're seeing them right now, right in front of us. There are big changes ahead. They're changes for the better, not for the worse. But of course, the media will have us believe that it's the end of the world and all sorts of stuff. But when we want to create wealth, there are 4 things we must do to create money. Or wealth. And when I say wealth, I don't mean money. Let me be clear. I'll define wealth as the following things: happiness, health, positive thoughts, excitement about what you do for a living, dreaming of where you're going to be next, enjoying every moment. I mean, wealth is nothing to do with money. In fact, I'd say money comes 7th or 8th down the list of wealth. Wealth is not about money. Although most people you ask will tell you at the top of their list will be money. But money is not what makes you happy. We only have to look at people like Michael Jackson, many others. I'll give you examples. Elvis Presley. Money does not. Well, Tom, tell us about, you looked after someone with lots of money, but it doesn't make you happy, does it? Here's Tom.
I don't know how many of you know the story how I got into it, but I happened to be, I was an SRN, that's a male nurse in England, and I finished training when I was about 22, and I wanted to become wealthy or make money, determined to. And you certainly won't do it by running around hospitals. So I then thought, right, okay, I was dying to go to America, so I said, right, if you want to make money, you have to go where the money.
Welcome to GoToWebinar, web events made easy.
And I joined this agency, and one of the early jobs I had, they rang me up. I didn't really want to work in the hospitals. It's not really my scene, that, but these agencies send you around to wealthy individuals that need your help. So one day the phone went, and the people who run the agency said, right, we need a male nurse. There's a very wealthy oil Texan man who's trading millions at a time, and the family are very, very worried because he's a drug addict. And we need somebody to run along, keep an eye on him. Okay, so I went onto that job, and luckily I gelled with the guy, and that's how it all started, because the guy who I went to look after was in charge of this syndicate in Century Towers in the middle of Beverly Hills, and they were trading. There was about 10 or 12 of them there, wealthy traders who would club together to accumulate what they call the underlying stock. In other words, a syndicate. I mean, syndicate's no secret. You go to the insurance company, Lloyd's in London, you can join a syndicate. There, they have these different syndicates, and you are put in a syndicate, might be for aeroplanes crashing or ships sinking or something like that, whatever. Of course, all the real safe havens for that is, of course, you'll never get into. They always push you into the ones like asbestos that can be rather dodgy, things like that. But that's a syndicate. So this guy was running a syndicate, and so I had to go in with him. Now, the one thing you can't do with drug addicts is cure them. And if you go ahead with the idea you're going to cure a drug addict, you better forget about it, because they're very, very crafty, they're very, very cunning, and there's no way you're going to make them give up being a drug addict. They have to do it themselves. But I got on very, very well with this guy, and because I was a technical drawer as well, I soon sat down and started drawing charts for them. And they only followed 12 stocks, that's all. And they would see every company that's launched, they issue shares, right? Well, now, big lump of the shares are kept by the banks to cover loans and things. Another big bunch is kept by the directors to keep control of their position. Others are just left in drawers and never looked at. But basically, what's left is what they call the floating supply. In other words, stock that's available for you to buy or sell. And this is what they used to aim at. They would slowly accumulate the floating supply of a company. And there was about 12 of them they used to trade. And when you've accumulated a certain amount of this stock, you find that you can control the movement of the stock. And you can mark it up, you can mark it down, you can do all sorts of things, because you've removed the reason to stop a move going up, and the reason why a stock won't go up, because people are selling into it as you mark it up. And therefore you can't make a profit if every time you mark a stock up, somebody out there is selling into your markup. So that's roughly what they do. But I was his chartist. Everything was by hand. There was no computers, no intraday stuff, nothing like that. And I would draw these charts. I was very good at it, actually. And they were really works of art, these charts. Huge bits of charting paper on large desks. And you had girls or women taking all the info from the ticker tape that was there in the office. And that's once you got the high, low, close, and volume.
Yeah, I tell you, it's such a shame that you didn't keep any of those charts, because they'd be worth a fortune now. But one of the things we do have is your award from the Golden Gate University for services to the Wyckoff theory. So let's go back to the, what I love about Tom, you'll always hear him, as soon as you hand the microphone, it's straight into the charts. But when he talks about wealth there, now you talked about going to make money. And you went where the money was, and you were very successful, but you have this belief system about you that obviously creates wealth. What I'm trying to show here is that you had a dream. You must have, because you said, well, I'm going to go to America. Now, at some point in your life, early on, you must have thought about that. So you started with a thought. You'd agree with that? Okay. So the thought became the dream. Now, who's ever heard of the saying, living the dream? Because that was the article that was written about me. And really, actually, when you live the dream, what that means is, when you live the dream, that you've thought about what you want to become, and as you become it, you're living the dream. So think about that very carefully, because a lot of the big traders that I've met who make a lot of money are living their dream because they knew they were going to be successful, just like Tom. But they didn't just dream it, because a dream is nothing more than a thought. They actually visualized it. And I did not believe in visualization until 8 years ago. I didn't think it, I mean, I can assure you I was very close-minded to all of this until I proved it to myself. A visualization is a thought that you put on paper, or you use a vision board, something that says where you want to be in a year, 5 years, 10 years, 20 years. I know where I'm going to be because I'm going on my journey. But every one of you listening to this right now has the same power because we're all the same thing. So seeing your dream is part of, and you could have used the word visualizing, but then we speak it, we talk about it. We actually want to say, what do we want to be? I want to be the best trader in the world. I didn't think I could be, and I was negative to it when Tom said, no, you'll be one of the best traders in the world, if not the best, correct?
Yeah.
And that was years ago. And I kept looking at him, shaking my head, no, I don't think so. And then, until I actually wrote it in my plan, as you'll see, I couldn't allow it to happen. So, and Ed says, and you enable the synchronicity that is always available to all of us. Ed, great comment, great comment. So it's very important to understand that as a trader investor who wants to make money, we must see the bigger picture of the world around us. Otherwise, we're not going to make that money, and we're not going to be happy. So dream it, see it, speak it, allow it. So let me ask you, I just typed this in. Can you give me any examples of universal laws that are generally accepted by human beings? Tom, give me one. A universal law that people say, yeah, that's right. We know that's there. Because we always talk about the universe.
Oh, the universe.
Yeah, one law, universal law that you say, well, everyone knows that.
What, gravity?
Gravity's one, okay. Anyone got any others? Okay, gravity says, anything else? Come on, there's other laws. Think about what we've been talking about. Cause and effect, well done, Ed. Yep, absolutely. E equals mc squared. That's a good one. It's a law. It's Einstein. It was Earl that contributed that one, so
Oh, yeah.
he's an engineer, so that doesn't count. Come on, cause and effect, gravity. What other universal laws are around us all the time? How about, I'll throw one at you for, you must pay taxes and die. Says Michael. Is that a universal law?
Yeah.
Well, obviously. How about supply and demand? Would you all accept that's a universal law? Supply and demand. Do you all accept that one? Supply and demand? Is that a law? I mean, supply and demand. It's around us all the time. How about effort versus result? What about that one? Effort versus result. Another one. Now, I can give you another 20, but I'm not going to because that's not the point I'm trying to make. I'm trying to make the point that there are universal laws all around us that are important that we take for granted as human beings because we just live our lives. But if we can harness those laws, okay, and understand them, can anyone tell me, just type this in, what are the 5 senses that a human being has that we're all born with, or most of us are born with, hopefully? The 5 senses. Just type them in. What are our 5 senses? I tell you, I'm amazed how many people don't know this, the answer to this. The 5 senses of the human being. Yeah, Brandon was right on it. Yep. Okay, a lot of people typing in here. Okay, we have senses, don't we? Taste, correct. Touching, you can feel. Smell, you smell it. Sight, and you can hear. Now, some of us lose those throughout life. Tom, you know, you've unfortunately lost some of your sight, but all your other faculties are there, aren't they? Now, is there a 6th sense that we don't understand? I believe there is, and I believe in the next 20 years we'll prove it. And this comes down back to the laws that we all accept, but there is another law that I'm going to introduce you to now that I want you to be open-minded to. Because a sixth sense is a sense that we don't understand, but exists, in my opinion. And it's only my humble opinion. How many of you have ever had the feeling of déjà vu, where you feel you've been somewhere before, so you've got somewhere, and you look at it, and you think, I've done this before. And you get that strange sensation. You go, oh, well, hold on a minute, I've been here before. I've done this. And it's a split-second sensation. And it doesn't happen to everyone, but you just get that moment in time where you just for a second, it's very brief, think you've been there before. Well, Tom's had it. Well, I've had it too many times. But, yeah, okay, so pretty much everyone said yes so far. Okay, you call it intuition. Yeah, okay. Now, I would challenge you to think that that's a sense that is given to you that we don't yet understand. Now, we all understand, we've all agreed, gravity, supply and demand, effort versus result, cause and effect. There is one big law that we've all experienced, and I challenge you to tell me you haven't experienced the next law, because if you haven't, you can't be human. How many of you experienced that law? Just type in yes. Have you all experienced Sod's law? Yeah. We don't know what it is. It's like we do something and it goes completely against us. We call it in England Sod's law. We don't know what it means, but it's like we knew that was going to happen. We made a decision to go long, and we knew it was going to go short. Have you experienced that?
Well, Sod's law is you sit waiting for the phone to ring,
Yeah.
take a bath, and it rings.
Yeah, exactly that. Tom, Murphy's Law. Okay, all right. We call it.
They call it Murphy's law over there.
All right, Murphy's Law. Okay, how many of you have experienced Murphy's Law then? Because I must have exactly. In England we call it the other thing, Murphy's Law. Okay, it is a law. It's a universal law. You might not think it, but just as you go, as Tom used an analogy, he said, I'm waiting for a phone call for half an hour, and it's not there. So he says, I'll go and get in the bath. So that's a bit of an effort for Tom. He gets in the bath, runs the water. As he jumps in the bath, the phone rings. It's the call he's been waiting for 4 days.
Yeah, that's right.
Murphy's Law. Okay, so we know these things exist. So let's define then what the law of attraction is. And this is a Wikipedia description. The phrase law of attraction, used widely by New Thought writers, refers to the idea that thoughts influence chance. Now, if we're going to trade, chance is a very big part of what we're looking to do, is to make money. The law of attraction argues that thoughts, both conscious and unconscious, can affect things outside the head, not just through motivation, but by other means. The law of attraction says that which is like unto itself is drawn. The law of attraction became widely popular after the release of The Secret, a 2006 film by Australian television writer and producer Rhonda Byrne. Many of you said you've already read it. Byrne followed up the film with a best-selling book of the same title and appeared in many talk shows. So there is a connection. Rhonda Byrne wrote a book about this particular subject, and that's one of the reasons that I talk about it, thanks to that book. So I will acknowledge that without that book, I wouldn't have got to the information I found.
Don't forget Earl.
Yeah.
Wait to talk.
Oh, no, he's coming after us. Yeah, don't worry. So what is the law of attraction formula? What makes the formula to understand how to be successful? Words. Okay, words. When we talk and we say things to ourselves, we talk to ourselves and other people. Words are communication. So be very careful, especially when you're going to go and trade, what you say to yourself, because it's important. Every moment you are thinking and talking to yourself through your thoughts. Your thoughts are made up of words that you think and then act on. Keep that in mind. It's important. Vibes. What do we mean by that? Vibrational energy. It's nothing. It's proving. They're proving it right now that vibes. Who's heard the saying, "Oh, that person has a really good vibe"? Have you ever heard that? Anyone? I don't know if that's an American saying. Oh, when I go in that room, that guy's got a really good vibe. Have you? It's very common in England. I don't know if that's so much in America. Oh, he gives off a really good vibe, right? Now, no one ever considers what the underlying meaning is. Very rarely do they. But it is talking about that we're all energy, and vibrational energy is usually, as you're right, it's a positive energy source that you're connecting with, okay? Exactly right. Results, okay? So if you want to do all of these things to attract, you've got to expect to get results. So if you want to be a great trader and give up your, you want to get out the rat race, you've got to expect to get results. And the wonderful thing about this is you can do it right now, because as human beings, we live for the moment. Forget yesterday and don't worry about tomorrow. You can press the reset button right now at this moment and change every thought you've ever had that's negative and turn it, and I know because I've done it. So I'm just explaining to you, I'm a former cop, I'm nothing special. I pressed the reset button and I changed. It can be done. But you'll need to find information. You'll have days that are bad, days that are good, and when you're trading, you might have a really bad day. Tomorrow, when you wake up, press the reset button. Life is for now. It's for the moment. It's very much about living in the moment and not worrying about what you did yesterday, because you can't go back and change it. And worrying about tomorrow is not going to help you. Live for the moment. Every moment's precious. Live for the moment. As a trader and investor, it's the best way. Don't worry about 10 years' time or 5 years' time. Don't worry about mistakes you made 5 years ago. You can't change them. They'll always be there, but you can't change them. Think to the future. And once I did that, I realized that life is like driving a car or an automobile. If you get in the seat and you're driving, you put into first gear and you press the accelerator and you go forward. If you constantly look in the rear view mirror, what's going to happen? You tell me. You're looking in the rear view mirror as you're driving forward. What's going to happen? You tell me. Ouch. You're going to hit something. You're going to crash. Of course you are. But how many people in this world are looking in the rear view mirror right now? Regrets. In their trading. And I could go much broader than this. Okay, I learned that rear view mirror is not the way to move forward. It's looking out the front windscreen and putting my foot on the accelerator. And once you find this in anything you do, and I'm not just talking about trading now, you will become a much better person, and you will become healthy, and you will learn to become wealthy. So does the law of attraction actually attract to you better things? Well, I'm living proof, in my opinion. I can't tell you about my life because it's my life. All I can share with you is what I've tried to achieve through meeting Tom. And did I have a real period of hell before I got here? Absolutely. That's for another book. But yes, I did. I went to the depths and back. So I know that you don't get here sometimes without going into a very dark place. But I do know that out of darkness comes light. And I realize that it's written about in many, many scriptures. We sometimes look at, and I'm not being religious here, by the way, I'm not going to talk about scripture because there are many scriptures. My business partners who are our programmers are Jewish. And this week they've been with us in England. We've been spending hours trying to find a kosher restaurant in Worthing. It doesn't exist. But I respect their religion because they respect me. So I'm not going to get religious here. We're going to talk about, law of attraction, which is universal. It goes through all religions, and it's written about in many religions. How many of you have heard of a book called Think and Grow Rich by Napoleon Hill? Let me just ask. See how many have heard of this particular book. I'm asking because I don't know, but how many of you have heard of this book? Think, and look at the title. It's a very old book, Think and Grow Rich. Well, Brandon says everyone has. Brandon, I'm afraid you're wrong. There are people here who says they haven't. And that's why I do these seminars, because most of you, I hope, will have read this, but there are some people who haven't. And there are many who haven't. Because Brandon, when you're listening to a webinar like this, there's an interconnection, but understand there are many people who have not got this information yet. It's a great book, wonderful tool for understanding how creation of wealth is done. And I liken this to the markets for a very good reason. But a lot of people here, and listening to this recording will not know. But how do you turn your desire of making money into wealth? Define what you want. Well, how much do you want? Put a number on it. Write it down. What are you going to give back to the world in return for the money you want? I mean, in my case, it's teaching Tom's work. It's trading the markets. Try and be specific about when you want it. Now, you won't always get it on the exact date, but if you're specific and you try and aim for it, you may be a lot better off than you are now. So if right now you're earning $5,000 or pounds a month, but you want to earn $15,000 a month in 5 years' time or 1 year's time, whatever it is, write it down, define it. Create a plan. We're talking about trading plans here. You've got to plan your life. Same thing. And then affirm. An affirmation is confirming what you want to do, and then read it to yourself. It's really important. So here is a book that we're going to give you. We're going to send it out I've got the PDF of this. It's not copyrighted. We're going to send you as part of the course the PDF of The Science of Getting Rich. Please read it. It was the prerequisite to The Secret by Rhonda Byrne. It's knowledge, great knowledge that we must pass on to others. So please pass it on to your friends and family. It'll help them. What Wattle said in his book is that our brains and our thoughts bring changes into our lives. In many ways, his ideas were revolutionary because he wrote that book over 100 years ago. But at the very same time, you'll find similar sentiments of what he said in that book, in the Bible, the Quran, the teachings of Buddha, and I could go on. Everything works under the same laws, yesterday, today, and forever. Wattles is adamant that we create our own lives, and that does not happen if we sit on our backsides waiting for the golden fruit to fall in our laps. Wattles said, the scientific use of thought consists in forming a clear and distinct mental image of what you want, in holding fast to the purpose to get what you want, and in realizing with grateful faith that you do get what you want. So, what's a self-limiting belief? Why do traders lose money then? Getting back to the point at hand, why is it in the markets people self-destruct? First of all, they probably start their day with these words. I cannot. I will not. It does not. I'm not sure. I doubt. Maybe. I don't know. It's impossible. I'm afraid. That right there is negative connotations. They're self-limiting belief words that we all say all too often. And you don't know you're saying them sometimes. If you're conscious of them, guess what? You can start changing them to something that makes more power, because we are all powerful. Positive belief systems can result in positive manifestations if positive action is taken upon them. I can. I will. I'm a winner. It is possible. Yes, the word yes is a powerful one. I am sure. Definitely. Jennifer, I just saw your comment, and it's totally right. If you plan for the worst, you expect the worst. Plan for the best, expect the best. Reverse your thoughts. Think of life as something that's going to give you what you want. Never plan for the worst, because the worst will You're sending a message to the universe that says, hey, give me the worst because I'm planning for it. It's like sending a message to someone. Hey, listen, next week's going to be really bad, but I've planned for it. It's very easy to do. Now, exactly, press the reset button as of now. Plan for the best. Expect the best. And tomorrow morning, when you wake up, do what I do. As you wake up, we all do it. We get out of bed, we put our 2 feet on the ground, say 2 things. Number 1, thank you for what I have. And number 2, I expect more. Please help me to find it. You'll find it, Jennifer, in your trading, your investing, whatever you do. It will be there, and I'll say that definitely because I know it works. So why is it then traders and investors lose money in the financial markets quite consistently? And you know something? The reason it is, and I'm going to get through this fairly quickly because we're overrunning a bit, but losing traders do not have a trading plan. So I've already gone through this in the first session, so I'm not going to go through all of my plan, but we're going to go to the most important part. Now, here's what Tom said, and I've added this to the plan. The market is devious, and many times you will buy on good news only to lose money, and sell on bad news only to see the price rise soon afterwards. And that is because smart money understand crowd behavior, and they take full advantage of the herd. Beware of the news. I think we've probably proven that. Now, I've been through the rest of this plan in the first session, so I'm not going to go through all of it, but we're going to go through some of the things that I didn't show you. Okay, so here's the markets that I specialize in. Number 1, the currency futures markets traded on CME Group. So I trade the Aussie dollar, the pound, the euro, the yen, and the Canadian dollar. I trade the E-mini futures, the S&P, the Dow, the NASDAQ, and the Russell. I trade the commodities, the gold, silver, oil, coffee, and sugar. And here is my stocks. You're all going to get a copy of this, by the way, so don't worry, you're going to see all of this. This is my core portfolio of US stocks. William, you'll recognize some of these. JP Morgan, British Petroleum, Bank of America, Apple, Google, Research in Motion, AIG, Caterpillar, Cisco, Goldman, Westport, and Microsoft. The reason I do these is because they're manipulated. Simple as that. I won't elaborate on that. Here is the strategies that I look for. On every chart, I look for the Yao Ming bar on the highest time frame, which is ultra high volume on a bar, and the higher the volume, the more potential for a large move. I begin the 25 bar count from the ultra high volume bar. If going short because the ultra high volume was an up bar, look for no demand bars and up thrusts for confirmation. This is especially powerful if the no demand and up thrusts are at the same price level as the ultra high volume bar, which will now act as serious resistance. Tom will come on to that in a minute. If going long, look for ultra high volume on a down bar. Narrow spread is a very strong signal. Then look for stopping volume and no supply. Wait for a change in the market behavior. That's very Wyckoff. Identify distribution at the top and look for the mushroom. The short as the mushroom declines at the far right edge of the chart. Identify accumulation at the bottom and look for saucer shapes, which is like the market forming a bottom and then going up. Go long as the price moves into the right edge of the saucer. Short on any core VSA signs of weakness, like no demands and up thrusts. I like to look for a trend change in 3 time frames. And go long on any signs of strength. Look for, again, 3 time frames of trend change. Here are the time frames that I use. And you're going to have all these in an email, so I'm not going to dwell on them, but 240-minute on the currency futures is my highest time frame. 60-minute is a key time frame for trend. 15-minute, I execute swing positions. 5-minute, I execute intraday positions. On the E-minis, I'm an intraday trader mainly. I look at the daily chart first for placement of trend. On the 240, I look for trend alignment. 60-minute trend alignment with the higher trend. 15-minute, looking for those ultra high volume Yao Ming bars. 5-minute, I'm going to execute 3-minute if it's moving fast. Commodities, I'm a swing trader, probably a bit like Earl. I'm not trying to get in and out on a daily bar. I'm looking for a bigger position. At the moment, I'm looking at gold and oil. Stocks, same thing. Monthly, weekly, and daily with smaller time frames on the intraday charts. Now, to finish off with, I'm going to bring Tom in. Now, when I look for trade setups, I've listed here for you my 5 favorite shorts and my 5 favorite long trades. They're all based on principles you've already been taught. So we already know these principles because you've got, you should have read the book, I hope. They're all there. My money management techniques are right here. They're public. I mean, I've added a few things in here. I will not risk more than 2.5% of my capital in any one trade. I will not risk more than 6% of my capital in any one account. In multiple trades, I have multiple accounts. I will close a losing trade quickly and treat it as a cost of doing business. I will never take a loss personally. I will never get angry because a trade went against me. I will learn from the losing trade but will not dwell on it. If I make 3 consecutive losing trades, I will cease trading and re-examine my plan. I will never revenge trade. I will allow a winning position to run using the chandelier stops and H stops in Trade Guider. My key objective is to get my stop to break even, then small profits after that without getting stopped out. I will use a minimum of a 2-to-1 risk reward. I will evaluate my trades every Saturday and will identify high probability setups for the following weeks. And I'll put some final thoughts in here. Most people get interested in stocks when everyone else is, Tom. The time to get interested is when no one else is. You can't buy what is popular and do well. Who said that? Warren Buffett. In which it is shown that if you scrap traditional approaches to the market and attack the financial conspiracy with its own weapons, you can beat the stock exchange insiders at their own game. Richard Ney. All these names are important to you. You should Google them. This is a funny one. The story is told that after he'd been deported to Italy, infamous New York City gangster Lucky Luciano granted an interview in which he described a visit to the floor of the New York Stock Exchange. Have you heard this? Yeah. When the operations of the floor specialists had been explained to him, he said, "A terrible thing happened. I joined the wrong mob." Yeah. True story. 6th of May 2010, the Dow drops 1,000 points in minutes. All the stops are caught, but most stocks do the same thing. And all is blamed on a fat finger futures trader trading the CME E-mini futures with 16 billion contracts, exclamation mark, etc. Maria Bartiromo from CNBC states, "This really sounds like market manipulation to me. This is outrageous." Everyday investors wonder if market is rigged is a headline on MSNBC. I start to pick up the picture. So then I say my final statement here, which I believe in and I know to be true. I will not get sucked into buying market tops and selling at market bottoms because I know the intrinsic relationship between the imbalances of supply and demand and the footprints left by the smart money. I know the game on Wall Street and I will win it every time I trade or invest. Fail to plan, plan to fail. I will follow my plan and adapt the plan as necessary to current market conditions. A plan is work in progress, just like living life. So I will treat each new trading session as a new opportunity. So here is what Tom looks for. And his key message is, I look for any key VSA principle that shows that a market is undergoing heavy accumulation or distribution by professional money. I will trade any market where a strong VSA principle has appeared. He then lists pretty much the same principles as I do, although he actually goes short on them. Here's how Tom leaves it, and I'm going to ask him to wrap up with a few words before we break and come back about 4 o'clock with Lauren and Earl. I immediately close a trade if it starts going against me because I got in too early. I always use a stop loss. I stay in a trade until I see an opposing principle that will stop the trade or the trend trade I'm in. I don't ever get emotional about my trading. I know I'm not 100% right, but I'm very close. What about 97? Yeah, okay. I enjoy helping other traders and investors to learn the 30 years of knowledge that I have gained. All the principles that you can see on the chart in hindsight will be there in foresight. So believe in VSA as I do, and you will not go wrong. So, to finish our session here, we've overrun 15 minutes. Tom Williams, for a few final words of wisdom before we go and have our din-dins. It's 9:45 here at night, and then we're going to hand over to Lauren and Earl. We'll probably take a 15-minute break because it's been a while. We've been going. I hope you've enjoyed this, but here's Tom Williams with a few final words of wisdom.
Right, thanks, Gavin. Right, how do I come up with a few words of wisdom? Everything Gavin's talking about is probably in the back of my mind constantly. I don't actually have to think of all that. It just becomes automatic to me. But what I do know is that there are certain principles in the market where you would expect the market to turn. And of course, I would immediately short a end of a rising market signal, end of a rising market signal. That is, the market usually gapped up after a bull move. The spread is narrow, the volume is ultra high. If it's up into fresh high ground, that's very, very positive sign of weakness. I would short that immediately as soon as I see that. Then the way the market is devious and cunning, they're not there to help you. You will very, very often see a no demand up move or bars back into the level of the first weakness that appeared. And that's a very strong indication. No demand, that's coming off. Occasionally, if the market allows it, they will also do an up thrust. If you see an up thrust, they mark it up rapidly, catch all the stops, mislead as many people as possible, only to collapse on the low. But you must have weakness in the background. If you've been stopped out yourself, then you have to go back in immediately. And don't worry too much about it. But you can rely on those principles, definitely, and that will eliminate a lot of the fear and trouble that you may have, because you can rely on those principles at work. As far as the bottom is concerned, we get what we call a selling climax. That's after a bear move. Suddenly the market collapses down, widespread down, the volume is massive, close in the middle. It's in low, fresh, low ground, and that the computer will come out with an automatic signal telling you it's a selling climax. You have to finish up. The way the market works is once it's in a bear move, it'll keep going down until you see a buying climax. Sorry, a selling climax. I keep getting those two. We just used to call it climactic action, but it's what happens is the professional money, right? They're there to wait for opportunities. A certain level will be reached where the locked-in traders, we call them weak holders, can't stand the losses anymore, and they will bail out. Professional money say, thank you very much, Christmas come early, and they will step in and buy. And that's very clear on your chart. So you have a bear move, suddenly the market rammed down, widespread, closed in the middle, volume's massive. That's what's going on. So I would certainly want to go long on that. If I was trading stocks at the time, I would be picking out stocks that are acting as strong or stronger with the index, and that's where you trade. As the market then probably chops sideways for a few bars, if it drops back down into that level where you first saw the climactic action on the downside, and the volume is now clearly low, that's less than the previous two bars, that's another very, very powerful sign of strength. And you certainly go along on that. And later on, you might see what we call a test in a rising market. That's another very powerful. Gavin said that's his favorite. if you ever see the market moving up in a sort of bull move and suddenly a red arrow appears, right, which is a sign of weakness, but the very next bar is tested. In other words, from the opening of the next bar, it's marked down, the spread is narrow, closed in the middle, the volume is less than the previous two. That's one of the most strongest signs of strength we have. You must dive in and buy that. And you don't have to worry about too much if you follow those few principles like that. I'll hand you back to Gav. Thank you very much for listening to us.
Okay, great. Thanks, Tom. Lauren, I'm going to hand back to you and to Earl. I hope you've all enjoyed that. We did overrun a little, but, you know, we do get a bit excited, don't we, Tom? Yeah, we love these things. I hope you've all enjoyed it. Tom and I are now going to retire because it's been a long day. We've had a very long day. But I hope you enjoyed what we taught you. Remember that when we talk about thought processes in trading, investing, or anything you do in life, it is very much about being positive and expecting the best. Don't expect the worst, and someone's just ringing us here, so bear with us. All right, so yeah, we know who that was. Sorry, the phone just rang there. But just to finish off, Lauren, do you just want to come in? You're going to take a break. I'm going to suggest you reconvene about 4:05.
Gavin just cut out. I'm not sure why. So I agree with Gavin. I think we're going to take a 15-minute break, guys, and then Earl and I will come back and wrap up with you. And so I look forward to having you in a few minutes. Thanks.
Yeah, thanks everybody. We're just going to say goodbye from us here. Yeah, I did cut out there with the phone rang, but hopefully you can all hear me okay. Enjoy the rest of your seminar with Earl, Erin, and Lauren Snedeker. Great educators, and from Tom and I, we want to say God bless all of you. Have a really great rest of your weekend. Hope you've enjoyed what we've taught you tonight, and we wish you well in your trading, and we'll get these archives put up on Monday. So thanks everyone, and enjoy the rest of the seminar. Take care, and good night. Lauren, we'll resume in 15 minutes at 4:05 p.m. Chicago time, and feel free to take the screen whenever you're ready.
Hi everyone, welcome back from the break. I just wanted to thank all of you for your rapt attention during the earlier presentation with Gavin and Tom. Just want to double check that you can hear me and see the screen before we begin again. Terrific. Okay, great. Some of the stuff that I have here, Gavin's already touched upon, so I will, I'll probably just skim through it real quick. I'm going to type in a book. And also, actually, I realized the link I sent you yesterday or 2 days ago in the email was for The Game on Wall Street by Hoyle. I forgot that it's not the Think and Grow Rich, not Think and Grow Rich, the Science of Getting Rich. That's a PDF. So I will actually send that to you after the webinar today. I'll send that all to you, and you can have that. It's a really great book. I'm going to also type in just make sure.
Okay, so I just want to make sure everything's fine. Earl and I are in the same room, so I realized I have to actually filter my microphone. So, okay, I'm just going to type in. This is the book that I'm about to reference for you. A client actually recommended it. It's called Your Money and Your Brain, and it's by Jason Zweig. And I'm going to send that right now in your panel box. And I'm going to reference that in just a second. It's directly tied to what they call neuroeconomics and the whole idea of what your brain goes through while you're in the market. So it's actually pretty cool. All right, so let's go to the third M, which is mindset. So we talked about method, we talked about money, and now we're talking about mindset. And Gavin did an excellent presentation on the law of attraction, or you can call it the power of positive thinking, the secret. It's also just sort of, you know, the whole idea of that there's a universe and we're all part of it. Nothing to do with religion, just that there's a universe and we're all part of it, and how our thoughts, minds, and actions affect our everyday lives and our success. So power positive thinking, like I was saying, and then having a belief system. And that goes to every aspect of your life, but especially when it comes to having a trading plan. If you don't believe in your plan or don't believe in your abilities or don't believe in your strengths in your SWOT analysis, you're going to have a much more difficult time trading. So I think one of the good exercises we did last week was trying to turn some of the the threats or obstacles into positive solutions. And what we did was two things. One is we all were willing to offer up an obstacle that we're all working on. And then the rest of the group, not knowing who you were, was able to give you positive feedback. But it got you to rethink how you phrase things or to rethink how you say things to yourself and to others. So the other thing we're going to talk about too, and Earl's going to get into a little bit more about how he's handled his losses with over the last few years as well, but having a systematic approach to handling losses. So you start off with this excellent plan, you're willing to fine-tune it, you're willing to adjust it, but you really need a strategy for handling a loss. One of the things Gavin put in there is he never takes it personal. That's right, you don't take it personal. So we're going to talk about that as well. Turning a loss into a lesson for yourself. And then turning the lesson into a win. So why was it a loss? How can I learn from it? And then how can I learn from that and make the right changes or adjustments to then actually make it into a winning trade for yourself? Okay, so emotional fortitude. Gavin again alluded to it. These doubts, worries, fears, losses, greed, all of that plays on you each and every time you trade real money in the market. Okay, so the whole idea is what you say is what you get. So the power of language, your thoughts, your words, and your actions directly impact how you see the world, how you interact with others. Have you ever noticed if you find yourself typically a positive person, do you ever find yourself in a funk or you're being especially negative that particular day, that particular week? You're in sort of a period of time where you're negative. And all of a sudden, people start to move away from you, either physically or you watch them not engage with you. Has that ever happened to any of you? For me, that's usually my barometer that I'm being extra negative. It's not an occasional comment. I'm like, wow, I'm really in the negative zone. And so people like themselves, or birds of a feather flock together. And so negative people tend to hang around with negative people. And if you're trying to be exceptionally positive, then hang around with other positive people because they'll make you feel better. I have a really great boss who is exceptionally positive 99% of the time. It's really, really wonderful to work with Gavin, because if I'm having a bad day or a bad thought for a second, he's right there to help me rephrase, retrain, regroup. My brother is a financial advisor, and he's been a long time user and listener of, thought vibration. He and I listen to Wayne Dyer. I don't know if you guys have ever heard of Wayne Dyer. He's an excellent motivator, public speaker. So anytime he and I are having a negative day, a negative thought, a negative week, we help each other turn it around. And so it really is the power of language. Thoughts, words, and actions all resonate. This goes back to the whole idea that, and I think it was either Joyce or Jennifer had said earlier, like, oh, I like that person's vibe. Well, vibe stands for vibration or vibrational level. And your thoughts, your words, and your actions all resonate, meaning they create a sound or a vibration in the universe. And so when you use positive language and powerful positive thoughts, then you're sort of aligning yourself, you're tying yourself to the universe in a more positive way, and then you receive more positive back. That's sort of the whole idea. You still have to take action, but it's understanding that the whole words or verbs or sound that you make is tying you to the universe, to that vibrational level. So words, even thought to yourself about yourself, can be really damaging. And here's an example. I can't, I don't, I'm not, I won't, I worry that, I fear that. Loser mentality. Now, when I say loser, I'm saying it to be purposely pejorative. That guy's a loser. He's a loser. I'm a loser. That is such an extreme label, self-image, and message that people tell themselves. And just like Tom was saying that you can't cure a drug addict, that loser mentality can only be changed from you. And so just because you have a losing trade doesn't mean that you're a loser. So it's really understanding that you are a positive winner. It sounds goofy, you're a winner. But it's the whole idea that you don't want to get caught up in the idea of being a loser, like, oh, I'm a loser. No, you just had a losing trade. That's the difference. Okay, someone was saying the sound was breaking up. Is it a little bit better now, guys? Okay, great. Okay, so here's some things about emotional control that'll help you. And this is kind of going back to that book, Your Money and Your Brain. Okay, a monetary loss or gain is not just a financial or psychological outcome, but it's actually a biological change that has profound physical effects on the brain and body. When you have a loss or a gain, your body actually goes through a physical change or reaction, and you have physical effects on both your brain and your body. How many of you would say that that's happened to you? You've felt something physical when you've won or lost in the market? Sure. I mean, you know the term like, oh God, I'm going to be sick. I mean, there is something to be said for that. It's not just butterflies in your stomach. It's like, oh, I just got a losing trade. Oh, it's definitely a physical effect. And if it's affecting you physically, then the brain has already told your physical body to do that. Financial losses, they're processed in the same area of the brain that responds to mortal danger. So if you think about the idea that loser mentality, trying to get out of that, understand that, you know, that whole, what Gavin was also talking about, that fight or flight mentality. When you're losing a trade, oh no, oh my goodness, we're doomed, the sky is falling, that whole idea, it's happening in the same area of the brain. So it's the idea of not coming into it knowing that you need to have no emotion. It's understanding where this emotion comes from, and then you'll have a better idea of how to handle it. Making money in an investment or trade. The neural activity of someone whose investments are making money is indistinguishable from that of someone who is high on cocaine or morphine. That's the exact same experience that your brain has. Now, I've never tried cocaine or morphine, but that's absolutely how money is affecting your brain. It's that high of having a winning trade, if you will. He looks elated, right? Woo! Okay. After 2 repetitions of a stimulus, the human brain automatically, unconsciously, and uncontrollably expects a 3rd repetition. So your brain just starts to expect that. Now, knowing how to read the charts like a VSA, you can do it from the standpoint of, if I see a double bottom, I know how to react. If I see a double top, I can prepare myself. Try and turn it into a positive in terms of understanding that if the market keeps going up, then your brain is expecting it to go up, in other words. Joy says that Wall Street's a movie showed this well. Absolutely, you know, the high of winning. The Ponzi scheme works really well and plays to this emotion of showing unbelievable returns, gets people ecstatic. And when you're that ecstatic, then you're more likely to refer other people into the group. And that's kind of that high of the win is how the Ponzi schemes are able to continue for a long period of time. Expecting both good and bad events is often more intense than experiencing them. Now, I think that is really interesting to me because obviously, if we're going back to our plan, we want to have very good trading plans, very good trading strategies and criteria and filter. But your expectations oftentimes are far more extreme and have a far more extreme effect on you than actually the experience of the trade itself. The anticipation of the event, the waiting. Yeah, Jennifer, you're absolutely right. The adrenaline rush at the possibility. I get the adrenaline rush at the possibility of a breakout trade. I'm not going to lie, it happens every single time. And then I go, okay, let's just wait, see what happens in the next 2 bars. And then I have to say the experience is like, okay, let's enter the market. But when I see that breakout potential bar, I always get really excited. Anticipating a gain and actually receiving it are expressed in entirely different ways in the brain. So therefore, money does not buy happiness. I love that. I love that kind of after effect. So anticipating a gain and actually receiving the gain is a totally different experience in your brain. So there's 2 ways that you act. You act reflexively, how you feel, and then reflectively, how you think. And everyone has a certain degree of that. Some are more analytical, some are more reactive. Have any of you ever taken the Myers-Briggs test? It'll tell you if you're extroverted or introverted. It'll tell you if you're intuitive or a judger. meaning analytical. So you can take it online too. It's most places have it online for free. It's a really, really cool personality test. So there's two ways that people think. And again, when I say emotional control, you want to understand that you have both of these things that you bring to the market when you place a trade. Jennifer, you know what? Let me just write it in the chat box so you know how to spell Myers-Briggs. Be happy to do that. Earl just said, let me guess, you came in as an extrovert, Lauren, on the test? Gee, what a surprise. Yes, I came in as an extrovert. Joyce, yeah, you're right. Sometimes it is a bit difficult to interpret. I do think that any personality test obviously lacks something. None of them are perfect. That one seems to be the most popular barometer. So I think that that's the reason why. Sorry, guys, if the sound breaks up. I think what happens is as I move towards the left and reach over to the screen on my left, the sound sometimes breaks up a little bit, so sorry about that. So I have jelly beans here for a reason. There was an activity or a study done by the University of Massachusetts, actually, the state I'm from. And what they did is they took two bowls, and in one bowl they placed one red jelly bean and 9 other jelly beans. So you had a 10% chance of picking a red jelly bean in the small bowl. In the larger bowl, they put 99 white beans, or they put, sorry, and then in the one on the right, they actually had 100 jelly beans, and between 91 and 95 were white, and the rest were red. So in the large bowl, you had a 9% chance of picking a red jelly bean. In the smaller bowl, you had a 10% chance of picking the red jelly bean. Now, which one would you choose? Would you choose the small bowl or the large bowl? This is so interesting. I love it. Earl, what would you pick? Okay, so Earl says he would choose the small. I know I would choose the large. And here's the interesting results that they found. So someone using the reflective thinking analytical system to think analytically would always choose from the small bowl, like Earl, Marty, Michael, Jennifer, Joyce, since it offered a constant 10% chance of success, while the odds of getting a red jelly bean out of the big bowl could never go above 9%. Nevertheless, just under 2/3 of people preferred to pick from the big bowl when it contained 9% red jelly beans. Even when it had held only 5% red jelly beans, nearly 25% of the participants in the experiment chose to pick from the big bowl, regardless of what their reflective or thinking system was telling them about logic and probability. I picked the bowl with the more red jelly beans, one person explained, because it looked like there were more ways to get a winner, even though I knew there were also more whites and that the percents were against me. People readily acknowledged the irrationality of their behavior, and even though they knew the probabilities were against them, they felt they had a better chance when there were more red beans. So what they say basically is denominator blindness. So in other words, take the small amount of money you're trading in the market against your entire wealth. The bottom number, the denominator, doesn't fluctuate as much as the top number. So you tend to focus more on the small number and less on the larger number. So you end up with denominator blindness. So what you want to do is strike a balance between your reflexive, how you feel, and your reflective, how you think when approaching the market. So now you know your body goes through the same biological, physical effects of being high on cocaine or morphine when you're experiencing a win. You also know now that your brain works in very much the same way with your thoughts and your actions in terms of how you feel about things and how you approach it. So you need to strike a balance. Trust your gut. What is your gut really telling you? Because your gut is that last level of defense for you. Know when the reflex will rule. Okay, that's kind of acknowledging that there are certain parts of you that will be reflexive, kind of like when you're at the doctor and they smack your knee. It's a reflex. Well, understand that there are times when you're going to be more reflexive, and then you can prepare for it. Count to 10. Like I see a breakout bar in 3 time frames. I know I need to wait until it tests within 2 bars, but I'm still acknowledging the fact that I get reflexive or reactive when I first see it. Count to 10. That's a great way to sort of say, wait, be patient. Are you really seeing it? Is this stock someone told me about really going to go up? And that's kind of also the reason why we try and teach you VSA, so that way you can make your own decisions regardless of what the news or what Joe, your neighbor, is telling you. Here's some other things on the reflective side or the thinking side. Ask another question. If, for example, if someone is telling you something and if someone's describing an investment or you're watching an educational webinar and you're not quite sure, you need to ask another question. That'll help you so you can be certain, or as certain as you can be. Conquer your senses with common sense. So you see it, you smell it, you hear it, you feel it, you taste it, you touch it. So understanding that your senses are there, your sensory perceptors are there to experience things in seconds, milliseconds, but then you need to add your common sense to it. Am I really seeing what I'm seeing, or am I just seeing what I want to see? Am I hearing the news and let it influence my behavior? Am I listening to someone else who has a much higher drawdown ability than I do, so they have a much larger risk tolerance than I do? You may not want to align yourself with that person and that person's strategy. Prove and disprove equally. And what I mean by that is, and this kind of also goes back to the denominator blindness. For example, if you look at a mutual fund, oftentimes they'll say, well, we had 20% growth. Okay, so that's the top number. You basically, what he's saying is, you want to then ask the questions, well, which ones did you get rid of and why? So if you only chose the ones that performed really well, also ask, why did you get rid of these ones? So in other words, if you're trying to ask yourself why you would take the trade, ask yourself why you wouldn't take the trade. Give yourself that pro and con. And then if you're still not sure, count to 10. And then, this was an adage, only fools invest without rules, right? So if you don't make a trading plan, then you're going to fail, right? If you fail to plan, then plan to fail. So it's the whole idea, have some rules, have some strategy, have some criteria, have some filters. And the whole idea is that that's on your reflective side. So you build in these things ahead of time before you're emotionally and physically and chemically involved in the trade. And those rules, or that thinking side of you, is going to help you strike a balance with the reactive emotional side of you. Do you guys agree with this? Does this sound like there's a little bit of truth in this? Because we're probably a little bit more analytical or a little bit more feeling depending on who you are, and at times you could be one or the other. So maybe when you're looking at charts before the market opens, you're a reflective person, but when you're in it, you're like, woohoo, let's go. So you've got to kind of figure out a nice happy medium. Now, some of you, I know, all of you know who Steve Phillips is, and some of you are in his room. He is always like Smooth Steve. That's what I call him. I call him Smooth Steve. He doesn't have a lot of emotion in his voice, and I know that he does it on purpose to eliminate some of the reactive or reflexive side of his brain when he's trading. So what he does is what Tony Robbins does. Is called neuro-linguistic programming, where you basically teach your brain how to act through your physiology. So in his, let's say he's getting excited about a potential trade, his voice gets calmer. It's very hard to do, Joyce. It's very hard. But Steve has been practicing it for a long time, and I would say he's probably a little bit mellower than me anyway. But I think that it's something like that. For example, going back to what we were talking about, having a bad day. If you're having a bad day, look at your physiology. Your shoulders are slumped. You're not making eye contact. Woe is me, mama, right? And like I was saying, you kind of physically turn people away from you, right? Because you're putting up the shield that's like, I'm negative. What are you going to do about it? So neurolinguistic programming is also like putting your shoulders back, making eye contact, having a smile, trying to turn your feelings around with more positive words, things like that, hitting the reset button. So I always notice that Steve does that. Even when he's about to take a trade, he gets calmer, quieter, softer, smoother. And I know that that's something that he's taught himself. I'm going to turn this over to Earl and talk about his emotional control.
All right. Hopefully everyone can hear me. Number one thing is that in order to maintain emotional control, I would definitely recommend exercising on a regular basis. For instance, I love to swim, so whenever I have a chance to go into a swimming pool and go swimming, I love that. Other activities I do would include bicycling, so whatever it is that you're into, and exercise regularly. Take mini mental vacations. And by this, it's like when you're trading is basically a lonely profession. You're isolated, and unless, I don't know, you have a trading partner or whatever, work in a brokerage firm or something like that, you're trading on your own. So basically try to get out of that isolation and being alone. The way I do it is, for instance, I go to Starbucks and I do my whatever end-of-day analysis or chart analysis at a Starbucks where there are people around me. So yeah, you know, it's like when I'm looking at the charts, etc., I'm basically alone, but I'm in a crowded environment. Or, I mean, that's just an example. Next. Meditation. Well, any form of meditation is okay. Yeah, it's like whether it's yoga, Pilates, just plain praying, or whatever your belief is in a higher power. So it's like meditation is also important. What the point I'm trying to basically get is that don't narrow your mind into a certain way of thinking. Try to expand. Try to give your mind, you know, a break. And so doing exercises gives your mind a break. Taking whatever mini mental vacations, you're giving your mind a break. Meditation, that gives your mind a break. So it's like our brains are not designed to be basically functioning 24/7. You need to give it some rest. Saboteur versus devil's advocate. This is a hard one to basically explain. Well, actually, Laura has already mentioned it in terms of you want to be around people with positive thinking, and you want to also yourself have positive thinking as well, and minimize, I guess, your own negative thinking as well as having contact with people that are negative. And I know it can be hard if basically due to life experience, due to your financial situation, etc. But try to get yourself to be to think positively. I mean, I myself, okay, I should admit, I do have negative thoughts, and it's it's sometimes hard. So, but as long as you have that in the back of your mind, and you're like, oh wait, I'm saying something negative, I'm thinking something negative. Stop, and let me try to switch my mind. For instance, I might think about when I saw Sting in concert in the ancient Roman theater of Ephesus, I mean, in Turkey. That was the best concert I've been to. Everything was perfect that night, and I try to picture myself back at that moment, and that basically physically changes my whole mental attitude. Oh boy, I want to go back there now. Okay, so should we go on to the next slide, or? Yeah. Oh, okay. In terms of people, it's like I guess nobody likes to listen to critics, but if a person's being how should in other words, giving some valuable feedback, you want to actually listen to that person and what they're saying. I get, for example, it's like when I was learning VSA, doing VSA, it's I had my friend also at the same time. He also bought a lot of material from Trade Guider, and we would go over it together, analyze charts together, and I would basically, listen to his feedback. And sometimes he always plays devil's advocate, and I actually learned a lot of VSA, etc. when he does that, because I'm like, oh, I never considered this, and okay, and that. It brought me up the learning curve, quicker, and instead of just me learning the material on my own. So you want to basically, take criticism as long as it's valuable, and avoid the people that are just being saboteurs. In other words, giving you negative feedback without no positive or value-added type of comment or criticism. All right. Okay. When it comes to risk management, I try to look at it in a very simplistic way. It's like with risk management, there's a lot of factors to look at. Whether it's like how much percentage of your equity to risk in any one trade. It's like how much of your capital of your total positions, like all your trades, etc. It's like I just basically boil it down to one question, and that question basically is, when I'm thinking of opening a new trade or a new position, initiating a new position, I ask myself this question: how many losing trades can I have in a row before I wipe out my account? Now, this question assumes, if you're a small trader, like I am, it's like it basically assumes that any trade that you're taking you think is going to be a winner. Nobody's going to initiate a trade that they think is going to be a loser. And so this question assumes that aspect. Another thing that it assumes is that the risk-to-reward ratio, the profit ratio, is you're going to maximize that. In other words, you're not going to take a trade where, okay, you're risking $2,000 for a potential $1,000 gain. You basically want at least like a $2,000, well, let's say $4,000 gain with a risk of $2,000. And so, and when you're initiating a trade, you also want to maximize your profit potential as well. So if we go back to the original question, which is how many losing trades can I have in a row before I wipe out my account, you want to maximize the answer to that question. I should call this the Earl question. In any case, so for instance, in my competition account, I want that number to be above 10. For my own personal account, I want that number to be above 20. So if you work out the math, yeah, it's like if it's a 10, you're basically risking 10% of your capital in any one trade. But remember, that's my competition account. So it's like in my own personal account, I would never risk 10% of my capital in any one trade. For my personal account, the 20 number, that works out to 5%. I mean, like I said, I might initiate a trade where I'm actually risking 2%, which equates to, I don't know, 40, whatever the number works out to be. So the thing is that the thing that I'm trying to get across is use your human. It's kind of hard to think in terms of percentages and whatever. I mean, when people trade, they're trading because they want to make money. They want to so with all those emotions, use those emotions. I shouldn't say to your advantage, but in order to keep yourself in check, which is like, all right, if I initiate this trade, I think it's going to be a winner, but what if it's not? So how much should I risk for this trade? And if I do, how many more trades can I take before I wipe out my account, assuming that this trade goes bad on me? So I hope that makes sense. Also keep a trading. Okay. Also keep a trading journal. With my trading journal, I basically it's broken up into two parts. Oh. Oops. Oh, okay, sure. I'll mute.
Sorry, when I prepared this originally, I wasn't sure if Gavin and Tom were going to be here for the whole thing, so I was sort of weaving them in. So Earl's going to come in 2 slides. So let me just go into kind of in general why you need a trading journal, and then I'm going to share with you Gavin's elements of a trading journal, and I'll talk a little bit about mine, and then Earl will share his. Okay? So, oops. Okay. So the trading journal does 2 things. It answers why you took the trade, why it was a winning trade. Let's aim for the positive, assume it's a winning trade. Why it was a losing trade. Why you are or are not successful with this strategy or with this market. That goes back to making sure your trading plan is a living document. You fine-tune it, you adjust it, you make changes often. You're willing to make changes based on your why. So your trading journal is your results, and it basically is a reflection of how good your plan is. And then this will also tell you, well, if your plan's good, but you're letting your emotions override it, then this will also, the trading journal will help you figure out, is it my mindset, my method, or my money management? And then it answers how you can adjust your plan. It'll tell you which area you need to go back to and work on. How many of you keep a trading journal now? Jennifer has one. Great. Well, thanks, Ed, for being honest. That's okay. Michael has one. Joyce is terrible at it. It's probably one of the most important factors in your trading, and yet many of us don't do it. So here's Gavin's elements of his trading plan. The first thing he does is he uses either a dictaphone, or I put speech recording software. I put a picture of a dragon because my iPhone has its own voice recording software, and then you can actually download the Dragon speech recognition software right onto your iPhone or iPad for free. And I'm sure Android has either Dragon or one of the other ones, or you can just get an old-fashioned dictaphone There's actually some other ones are kind of as small as an iPod, and you can find them online, or you can get them at a computer electronics store, and they're, a dictaphone, but what happens is it's a modernized one. So it looks like an old-fashioned recorder, but it's tiny, and as soon as you record it, it actually becomes either a podcast or a WMV file on your computer. It's just, it ties to it. So either way, he basically uses that. When I was a teacher, I taught from the idea that everyone was a different learner, and I had, the particular one I have is from Sony. It's about $100, and what it does is as soon as I record it, it immediately becomes available on my computer, and then I could upload it to a site that my kids could access, which would be they could download it onto their iPod. And that would be great for kids that either have a hard time paying attention, which most teenagers do, but it would also give them the ability, if they missed class, they could hear the lesson. And it was sophisticated enough that it would filter out any background noise that was going on. So if someone was talking to their neighbor, it would filter it out. So it's actually a very, very good one. It's by Sony. I got it at Micro Center for about $100. So yeah, I was considerate. I was also a special ed teacher, so I had a higher level of interest in making sure kids that were different learning styles could actually learn. So, and history is heavy reading and heavy memorization, and if you have, if you're low in those areas, hearing it over and over again instead of through a textbook is a lot better. So just something, but this is what Gavin does. So while he's looking at the charts and he's about to take the trade, he's basically recording what he is about to do. Okay, so for example, I see a shakeout, and now I finally see a no supply on low volume, and the next bar closes up. And then, so he's basically walking himself through why he's taking the trade. He sets his profit targets. He'll ask himself, do I want to set a profit target for this one? Do I want to just let it run? That's kind of like he already knows what he's going to do depending on the trade. He defines his risk, so he makes sure that he knows exactly what his risk is going to be, the percentage that he will allow for his risk for that particular trade. He will enact his stop management, either the trailing stops and trade guider, or he will have a specific range that he is going to use as his stop, already set up ahead of time. And then he takes a screenshot with a software called Snagit. He records his exit, he records his profit and loss, and then he explains briefly, kind of how the trade ended up, why. So it was, a profit because, it was a loss because. So that's essentially what he does. Now, the one nice thing about his trading journal is that the dictaphone of the speech recording software is actually going to allow you to be in the moment. So sometimes journaling can be a little bit time consuming. So between the step 1 and the screenshot in step 5, you're actually skipping a bunch of steps for yourself, making it much quicker. So if you're just talking and you're like, oh, I see a shakeout, I see this, I'm taking, I'm taking an entry, etc. This is why I do it. And then at the end, let's say, the nice thing, and I do screenshots as well. I use one called A Shampoo. It's cheaper than Snagit. It's literally the word shampoo and then the letter A before it. I think I paid like $12 for the whole year for it. But what I'll do is I'll take a screenshot, and then afterwards I'll actually write up the little summary after the fact. But at least I know where I took the trade, so I don't have to go back at the end of the day or go back at the end of the week and find the time frame and find the chart. I just snap it and save it, and then I edit it or adapt it afterwards, which is really good. So Earl, I'm going to take you to yours, and then I think yours goes a couple of slides, and then it'll be back to me, okay? And I'll mute myself right now.
Bear with us, folks. We're just going to be changing screens. Okay. So, number one, are people able to see my screen right now? It should be an Excel slide. Okay. So, as I mentioned earlier, I basically have two trade. For my trade journal, I have two templates. One to do, and number one, I'm a position trader or an end-of-day trader. I don't day trade, so I can write things down, take my time, which is the whole purpose of doing end-of-day trading. I'm not under any sort of time pressure as day traders are. So I got two templates. One to quickly scan various markets on an end-of-day basis, and then if I see anything interesting on the charts, I'll then do a more detailed analysis. So right now what I have on the screen is for doing a quick scan of the charts to see what's going on. And in the symbol area, I jotted down some symbols. For instance, for the euro, crude oil, S&P 500, Treasury, gold. You can go down this list. The first thing I'm looking at when I'm looking at the charts, do I see any strength or weakness in the background? Like, am I seeing a whole bunch of shakeouts, climactic action, etc., or are they being offset by upthrusts and whatever? It's like, do I feel that there's more strength versus weakness in the market? And I jot it down in this column that's labeled as potential strength or weakness. In the next basically column, I jot down, all right, is price currently, whether it's a rally or a pullback, is it approaching a resistance, a horizontal resistance, or a support? Or is it breaking out? So in this column here, for instance, the euro has been going up, so I would say approaching horizontal resistance, something like that over here. So basically, what is it currently? What is the current rally or current pullback doing? The next thing that I write is, all right, is this rally or pullback? Is it on increasing or decreasing volume? That's what I put down here. So just let me throw out an example. The market is rallying, and it's rallying on decreasing volume. That automatically should have warning bells because if you have a rally on decreasing volume, that's actually bearish and not a bullish scenario. Any case, moving on, it's like, all right, am I seeing more large ranges versus small ranges? Is the price action on large or small ranges? That's the other thing that I jot down or write in the next column here. And then I go into, write down some interpretations or notes on this chart. So this way, I'm basically telling myself to look at certain things that I know are important, but yet that I can do relatively quickly. And in this notes, you can jot down anything that you're seeing. I'm just thinking off the top of my head, for instance, there's something called a bearish shortening of the thrust or a bullish shortening of the thrust. It's like, so I would, if I'm seeing that happening in the market, that's an example of what I would write down in this notes or in other things. If I'm in a position already, let's say, I have a position in gold, over here, it's like, if it's after doing my quick scan analysis, I have to decide what to do with that position. Basically, I'm monitoring my position. Should I keep my stop loss where it is, or should I move it? Should I make it, instead of a stop loss, should I make it a trailing stop loss? And at what not dollar amount, what price should I put my stop loss at? That's what this column is. If I'm not in a trade, and I see, you know, some a good opportunity, I basically write down, should I go long or should I go short? So if I write down go long or go short, I then move on to my next template. Bear with me, I need to all right. I'm switching to the next tab. Okay. So put on the spotlight back on. So if I see a potential trade, now I'm going to be like, all right, to put things in more detail. This upper portion will basically be filled out later after I do some detailed analysis. But I do either circle whether I want to go long or short in a position. In this contract area, I would write down, you know, what I'm considering. For instance, I keep saying gold, so all right, you know, I would write gold contract, July, whatever month. But by the way, I'm a futures trader. Writing down the date. So the thing that I next do is I again look at the background, and then, you know, am I seeing strength or weakness in the background? And in this area, in the pass bars, I jot down exactly kind of what I'm seeing. Okay, I'm seeing a shakeout on such and such date, and then I'm followed by climactic action or vice versa. You know, so I'm jotting down notes as far as what I'm seeing in the pass bars. As far as the current bar, you know, maybe it's doing some sort of test or climactic action or shakeout or whatever. I write that down in the current column. In the trend, I'm basically writing, you know, is the market going up, down, sideways? This can actually be left blank in the current area. And then after jotting down my notes, I then go on a bar-by-bar basis. Basically, I'm now doing a bar-by-bar analysis. So I would, you know, jot down the dates in the date column. Bar movement, is it going, is the bar up, down, or level? Tom Williams says level. In other words, today's price is equal to yesterday. I mean, today's close is equal to yesterday's close. That's what level means. Range width, large, small, normal, or I should say average. Where the close is, high, low, off high, off low, middle, above middle, below middle. And then the volume, you know, increased, decreased, ultra high, low, etc. And after jotting all these down, is it doing a VSA principle? Like, for instance, you know, I might see, okay, this day it looks like a test. I would jot down in the notes, you know, test or shakeout, etc. Hold on. Now I need to turn off the spotlight. So you see I have several rows in order to do the bar-by-bar analysis. And then, okay, I then assess basically, you know, I look at the rallies and the pullbacks. Am I seeing bullishness or bearishness in the rallies? And I look back, you know, I want to look at least, you know, 3 rallies and at least 3 pullbacks. You know, so am I seeing a behavioral change? Like in the background it used to be bearish and now it's bullish, or maybe it was just continuously bullish or bearish, whatever. In terms of, am I seeing bullishness or bearishness of rallies and pullbacks? That's the, I would write down my notes in this area here. Then I would look on the bars, or now it's time for the multi-frame or multi-time analysis. So I switch to a weekly chart, and I jot down, you know, basically my notes here. You know, is it looking strong, weak, or whatever, bullish, bearish? So what is my VSA review saying on the weekly charts? Switch to a 4-hour charts and ditto. Do the same things. And after all this, am I still willing to take a trade in this? And, you know, if so, I then jot down my notes in terms of reasons for taking this trade. And now I can go back to the top. So, okay. My, you know, quick notes as far as, you know, what entry signal am I seeing? And I would jot down the notes here. As far as entry, it's like what price would I like to go in at? I would jot that down here. And then I would decide, okay, where my stop should be. And so I would jot down my stop loss here. And then as far as, all right, where would I want my, how far do I think this is going to go up or down? In other words, profit target, what my profit target level should be. And if I get into a trade, then I write it down, like on such and such date, I got filled at such and such price. And then when I get out of the trade or exit the trade, I write down the date that I exited the trade and what was the exit signal. For instance, I could have just plain stopped out at a loss. I would put stop loss as my exit signal. Or maybe, the trade went profitable, I'm using a trailing stop loss. And then if my trailing stop loss got triggered, then I would put trail stop loss or trailing stop loss. Or I might say, okay, it's hitting resistance and it did an up thrust at an resistance, or vice versa. It's hitting support and it's doing a shakeout at support. So I'm like, all right, I better take my profits and get out of the trade now. So I might say, jot down, okay, I'm seeing an up thrust at support or shakeout at, an up thrust at resistance, shakeout at support. Write that down here. What was my exit price? And then jot down, all right, how much money did I make or how much money did I lose? So this is, my 2 pages for my trade journal, and which, I use in terms of evaluating my performance, if need be. Well, you always need to evaluate your performance, and I try to evaluate it on a monthly basis, but definitely every quarter I do so. Lauren, I'm going to hand it back to you, or? Okay. Change presenter. Do you got it? Okay.
All right. Thank you, Earl. I appreciate that. Let me just quickly oops. These were some of the questions that he asked. Are prices approaching support or resistance under what volume, strength or weakness? His in-depth scan. Okay. And then tying it all together. You talked about that, right? Yeah. Okay. All right. So print screening. I want to talk to you guys about print screening. This goes back to either using Snagit or A Shampoo or one of those, or you can just use the PRT-SC button on your computer. Trade Guider, real-time platform and end of day, you can actually print the screen as well. And the whole idea is annotating your charts. So it's very easy to sort of draw an arrow to this is where I entered, this is where I exited. And if you have your, like, let's say the trailing stops in there, you can actually show, it sort of tells the story for you that your exit was right where it hit a stop, for example. What I like about it is that it's a visual journal that charts your progress. So sometimes spreadsheets are not always as helpful for me as much as I would much rather be able to see this. And what I'm hoping is that my mind will remember that visual, so the next time I see it, maybe I'll make the right change the next time, or I will duplicate it again if it was a winning trade, or make the right adjustment if it wasn't. So like I said, you use the features on your computer or within the platform. Buy a screenshot software. We're all, to some degree, a visual, an auditory, or kinesthetic learner. And if you use a combination of all of those, that's one of the reasons why I like the dictaphone, because when you, or the voice recognition software, when you say something out loud, it actually is telling your brain two things. So you've had to think it and then speak it, which takes a whole process, obviously happening simultaneously in milliseconds. But then when you say it, you're actually telling yourself out loud. It's almost like reading out loud increases comprehension. So by telling yourself, okay, Lauren, you see the potential breakout bar. I'm going to wait for a test within 2 bars. Oh, there's my test on lower volume. I'm going to place my buy 2 ticks above the high of that breakout bar, and okay, here we go. We're in the trade. Let me add my stops. And then, you're basically walking yourself through it. So then the next time you can actually say to yourself, what didn't I do right, right? This will increase your learning, and you can always look back on these. It takes seconds to look back on it. Another reason why I like print screening is, again, if you're an intraday trader, this is a quick way to get around the time-consumingness that detailing a journal at the moment that the trade's happening. So this will also give you a nice prompt at the end of the day to then add some description. So one thing I like about the print screen is it takes a picture just like a JPEG or a PNG. And then what you can do is you can either shove them all in a folder and write notes in a text box on the chart itself, or what I do is I copy and paste it into a Word document, and then I'll write something up underneath it. That's also actually how I learned. I would take screenshots of the charts, and I would say, okay, I see this in the background. The dialog box tells me to look for this and this, or to be aware of this. And so I would literally write down my thoughts as they were happening, and then I would screenshot a half an hour later and say, hey, look, my thought process was spot on. So again, one of the things about learning is we all have different ways to do it. But sometimes if people give you examples, you could maybe do it, maybe not do it, use a combination. Profit and loss. One thing that's great is that your platform, no matter what platform you have, will keep track of the trades you took. The only issue, though, is if you're on a simulated account, oftentimes your P&L will not keep in the trading platform. If it's not an actual trade you took with real money, some of those platforms will only keep it as long as you have the system open. So if you shut down your computer for the day, that information is gone, and you want to check with your broker. So the nice thing, though, is that most platforms you can actually export your P&L into an Excel spreadsheet. So I use a combination because it gets a little dry for me to have an Excel spreadsheet only. So I use a combination of the Excel spreadsheet, and it basically has my profit and loss, and I'll put 1 or 2 sentences for why the trade worked or why it didn't. I might also put the sequence, like I might put climactic action, shakeout, no supply, enter. Breakout bar, 2 tests, 2 ticks above, enter. Something like that. And then I'll take a screenshot and I'll have both. This is also, again, if you get in the habit at the end of the day before you shut down your platform, you just quickly export it to Excel. You can always go back on a Friday afternoon and review all your trades for the week. You've now had it recorded. It's less time consuming, and if you feel that it's not time consuming, you'll be more likely to do it. It's kind of like housework. I can't stand housework, and I have a very small apartment, and I hate it. And I have 2 cats, and they're lovely, and they're clean, but they shed. So I have a game for myself, and I will clean for 10 minutes before I'm able to sit down and relax for the night. I'll just take 10 minutes. You can't clean the whole house in 10 minutes, but guess what? You know what you can do in 10 minutes? You can wipe down the sink, or you can quickly vacuum, or you can straighten the sofa. So what it does is if you do it like this, you're like, oh, okay, even set a reminder for yourself at 4:45 p.m. every day, or I don't know, markets close at 3:15 my time. Okay, Excel, end of the platform, export, and then at the end of the day, if I have time, I'll quickly look at my screenshots, or I'll wait till Friday or Saturday morning over coffee. But the nice thing is you can also write notes now and then write more notes later. Say, note to self, you read the chart wrong, dummy. No, I'm kidding. Keep it positive, right? And then later you can kind of say, oh, okay, I know I need to actually review that. So that my goal this weekend is to go back to the chart reading masterclass and watch that one particular principle, or read it again in Tom or Gavin's book, something like that. Give yourself a goal or a way to solve your issue. So here's some last words for you. If you think you can or you think you can't, you're probably right. It's one of my favorite sayings. If I could remember who actually said it, I would quote it properly. I can't remember who it was, but it's really true. If you think you can do it or you think you can't do it, you're right. Gavin says, again, it's not his quote, but whatever your mind can conceive and believe, it will achieve. So you have the power within you to be excellent. You have the power to manage your analytical and your feeling, and you have the power to be an excellent trader. And frankly, you're also really lucky that you found Trade Guider. So you're not just sitting around just using the same old tools that everyone else is. You're actually picking up on some pretty important anomalies of supply and demand and understanding that it's a game and that you're up against the game and how to get through those tools, right? And, you know, Earl, I just sort of summarized a conversation you and I had 2 days ago, you know, that your mind is your best and your worst enemy, so know your weaknesses, know your limits. Oops. I don't know if you want to add any final words to that.
I would basically also state, you know, keep it real at the same time too. So knowing your own weaknesses and your own, not only your own strengths, but also your weaknesses. And I would extend it to your trading methodology as well. Know the weaknesses of your trading methodology and either accept them or find filters to address them. And I'm just going to basically, you know, give an example because all trading methodologies have their weaknesses. Everybody experiences drawdowns if they're trading, me included. And for the VSA trading methodology, the weakness is when the market is going through a reaccumulation, you don't know when the market's going to go through a reaccumulation phase or a redistribution phase. A reaccumulation phase will look like a distribution phase initially. A redistribution phase will, did I just say? Oh, the other way, sorry, okay. A reaccumulation phase, all right, so well, let me start again. A reaccumulation phase initially will look like a distribution phase. A redistribution phase will look like an accumulation phase. So that's the weakness behind the VSA methodology. And so just to kind of make it kind of simpler, that's why I don't trade double tops or double bottoms anymore, because there's a danger of me being wrong and that it could be a reaccumulation or redistribution phase. So I've developed some filters to address that. Yeah, I missed some trades, but at least I'm not being hit by misreading the markets. In other words, like I said, also know the weaknesses of whatever trading methodology you use and either accept them if you're going to still, you know, trade them, or, you know, have filters to address them. Like, for instance, you know, I won't trade a double top or a double bottom. You know, Gavin has his, you know, I'm kind of using what Gavin described in his second book, looking for basically three VSA indicators occurring over a 20-25 bar period, and my favorite being climactic action, followed by either an uptrust or a shakeout, followed by a no demand or a, you know, test.
Thanks, Earl. I appreciate that. You know, and one of the things that I really like about Earl is his genuineness and sincerity. You know, he and I talk about, like, no methodology is perfect, and so you just have to know the limits of it and kind of know your own limits. No one's indestructible, but at the same time, you know, if you're feeling negative about yourself, don't trade that day. You know, if you know, use what you know your weaknesses, know your limits, but work through them, work around them, have some strategies in place. Anticipate that your trade is going to be a winning trade, but have it set in place in case it's not. A couple of things for you. So the VSA templates are going to be up for you. I just needed final approval before I could put them up for copyright reasons and some other stuff, so that was the delay for that. So they'll be up for you this week. This session's video and PowerPoint slides, both my set and Gavin's sets, will be in there. And lastly, I owe you an email with the link to the Science of Getting Rich, and I am going to post Earl's trading journal as well in this in your files. So you'll have access to all of that. And obviously, if you guys have any questions, feel free to email me. There were a bunch of books and a bunch of references that we made, but at least you'll have them if you go look for if you look for them in the slides choice. Great, because I hate Excel. Yeah, I hate Excel too. And I think it's just really using a combination of both. But I would tell you, get in the habit of exporting your P&Ls, because you don't want to rely on a trading platform for all your information. So with that being said, I want to thank all of you for your attention and your attendance today. I really had fun in this workshop with all of you. You've been really, really great. And I look forward to getting your trading plans in the next couple of weeks. The sooner you get them to me, and Jennifer, I know you've sent me yours, so I'm going to work on that one. And then we are going to be setting up 15-minute, 20-minute sessions with myself and Gavin. And actually, Steve Phillips said he would also be somebody that would be willing to look at your plan as well. So you're going to get some great feedback from all of us. And I really want to thank you. Yeah, Brandon, I'm going to upload that for you, absolutely. You'll have all of those accessed by Monday. All right? So you guys all have a great, great weekend, and I'll see you all next week. So take care. Thank you.